and its operations in the United States. In July, international bank regulators seized BCCI's assets in a number of nations, charging the bank with fraud and money laundering. In the U.S., the Federal Reserve has been investigating allegations that BCCI secretly controlled Washington, D.C.-based First American Bank. 2 weeks ago, the committee heard from two former First American executives of First American Bank, Clark Clifford, who was the chairman of the board, and Robert Altman, who served as the bank's president. Both men resigned last month in the face of revelations of BCCI's involvement with First American. Coming up next, you will see Friday's hearing, during which the committee heard testimony from 5 current directors of First American Bankshares, the parent company of First American.
Committee will come to order, please. Chair apologizes, but he was under the misapprehension that the time was 10 a.m., not 9:30. And I just didn't think of checking this morning, but yesterday, almost there at the end of yesterday's hearing, I was told it was 10 o'clock, so I apologize very much for the delay. I want to thank the witnesses first and above all for responding to our call invitation. Of course, this morning is the second of, actually the third, in what will be a series of investigative hearings with respect to the so-called BCCI matter, the infiltration into our banking system. There's no group more important to the safety and soundness of this nation's bank than the thousands of directors who sit on the boards of these institutions. I have said from the beginning, 2 years ago and even years before I ever thought I'd be a chairman, that with the advent of the changes taking place since the late 60s, when the merger acts were being amended, the 1956 Merger Act amended in 1965, and that imperceptibly, as so much seems to happen, but which actually is of longer duration, in the effort to acquire banks without going through the time-honored, theretofore, chartering process. In the late 60s, you had acquisition of one bank at the controlling interest of another through the hypothecation of banking stock. That was one reason why you had the amendments to the Bank Merger Act, the One Bank Holding Company Act, and the like. It was to get around the restrictions of the pre-war world. But imperceptibly also, everything else changed with it, including the role and particularly the perception of the directors themselves as to their role of directors. And from what used to be called a set a qua trust, it became a venture to make money. Boards of directors, when they function properly, can be the #1 bulwark against insider shenanigans, and in fact, that's what the system was predicated on originally. Corrupt management, illegal and unsafe banking practices, directors who ask questions, demand evidence, and take a hard-nosed attitude about their fiduciary responsibilities are the unsung heroes of the U.S. banking system. Unfortunately, all too many directors bring to the table only one thing: a huge rubber stamp with one word, yes, for all management decisions. As a matter of fact, the common thread to all the hearings that I've presided over with has been, in the case of the S&Ls, what was the role of the directors, outside, inside? And in most instances of the cases we had here, it was the bank managers that were running the show and the directors there in a very casual, almost as if they were on the sideline. Most of the BCCI First American news stories have focused on the personalities of Clifford and Robert Altman, what they knew, what they didn't know, and what they told, didn't tell. Today we have before us another group of First American insiders, the board of directors. They did not sit on the First American board by accident. They were handpicked by Clifford and Mr. Altman. We're interested in what they knew. Now, we're not interested from the standpoint of culpability or this or the other, but I, for one, am particularly interested in knowing how the directors looked upon themselves in their role as a board of directors, and what it was that they had an opportunity to view or didn't have an opportunity. We want to explore generally the role the directors took in the acquisition made by First American. Most importantly, we need to know the relationship between the board and the bank's regulators, Federal Reserve, Office of the Comptroller of the Currency. Did the regulators raise questions with the directors about BCCI or Middle East investments in general or some of the others? What was the flow of information between regulators and the board? How vigorous were the regulators in their dealings with the board of directors? This committee has subpoenaed thousands of documents in the course of the investigation. We're still combing through the paper. In fact, the papers we've accumulated would fill this room. And we plan additional hearings, of course, in the coming months, with the end in view of discharging legislative responsibility. We're not a judicial body, we're not an investigatory body, we're not a prosecutorial body, and we don't intend to even remotely partake of any of those activities. Most of the questions remain unanswered. It's the obligation of this committee to fully explore the entire role. Since we began our investigation of the BNL, for instance, which I consider far more egregious a case of the inadequacy of our laws and the screening and the regulatory process in the case of foreign financial and banking activities in our country. But since we did, and it's going on 2 years, Congress and the public have had some focus of attention on the serious problems emerging from foreign banking interests in this nation. The rather inadequate or apathetic, whatever the point of view is, approach of our regulators to these problems. I think that, as in the case of the others, the preceding S&L and all, the Congress cannot absolve itself of responsibility here. We should have been having, this committee particularly should have been having hearings since, in fact, I don't think any later than the famous Hunt Commission report in 1969. I mean, that was a clear signal with very specific recommendations, some of which we're barely coming around to now. Pending before the House at the moment is a major revision of laws relating to foreign banking, and these hearings may lead to additional amendments to this legislation as we asked the regulators not too long ago to join us on a priority basis. We know that not only BCCI, BNL, and Lord only knows how many others, infiltrated the thrift industry, banking industry through major investments in some of the, for instance, corporations in Florida like SunTrust and the like. Of course, we need to go into that. We intend to, Mr. Wiley. We've had that on the books since last year. We haven't completed the S&L. I mean, this committee has yet to issue a full report. And we can't if we don't have, as yet, fully adduced all the evidentiary and documentary matter that would enable us to have a knowledgeable grasp of what we would report and recommend. The committee also pressed forward in getting to the bottom of the Justice Department handling of BNL, BCCI fiascos, how they dovetailed with the regulators. The American people, I'm convinced, expect this committee to go beyond the headlines. And of course, this morning's hearing is a good example. Now, we can't control it, nor do we desire. I, for one, have always felt that probably the most important force in our society is the news disseminating agencies, both press as well as electronic. And real power is there, and if we can't, nor should we even try to remotely direct it, but if they're not on the ball, and if they're not interested, or if they're not equipped and prepared to know what to look for, then if the Congress also doesn't have hearings, then we're in a bad fix as far as the American public is concerned. So we intend to continue. I'm going to indulge my colleagues on something here and the witnesses to read something here. And I'm going to quote, "Gambling is a business now where formerly it was a disreputable excitement. Legislative bribery and corruption were looked upon as antiquated misdemeanors. Governments and ministries no longer buy the raw material of legislation, at least not openly or with cash on hand. The same cannot be said of individuals and corporations, where they have of late not infrequently found the supply of legislation in the market even in excess of the demand. This strange conflict convulsed the money markets, occupied the courts, agitated legislatures, and perplexed the country. For Americans, they involve many questions. They touch very nearly the foundation of common truth and honesty, without which that healthy public opinion cannot exist, which is a life's breath of our whole political system. A directorship in certain great corporations has come to be regarded as a situation in which to make a fortune, the possession of which is no longer dishonorable. The method of accumulation is both simple and safe. It consists in giving contracts to a trustee of one's own trust as an individual, or in speculating in the property of one's set-apart trust, or in using the funds confided to one's charge as treasurer or otherwise, to gamble with the real owners of those funds for their own property, and that with cards packed in advance at that. These proceedings are looked upon as hardly reprehensible, yet they strike at the very foundation of existing society. The theory of representation, whether in politics or business, is of the essence of modern development. Our whole system rests upon the sanctity of the fiduciary relations. Whoever betrays them, a director of a railroad no less than a member of Congress, or the trustee of an orphan's asylum, is a common enemy of every man, woman, and child who lives under representative government. The unscrupulous director is far less entitled to mercy than the ordinary gamble, continuing as he does the character of the traitor with the acts of a thief. No acute moral sensibility on this point, however, has for some years troubled Wall Street, nor indeed the country at large. Gentlemen, that was written in 1869 by Charles Francis Adams, Jr., one of our great Golden Age historians. He was writing as a result of the hearings that the newly constituted Committee on Banking and Currency, as a result of the 1865 National Currency Act, chaired by James A. Garfield, later to be president. And these two historians, Henry Adams as well as Charles Jr., Charles Francis, were able to report and avoided the threats then common in that day and time and threats to their lives, and wrote in the publications and journals as they existed in that age in order to inform, but only on the basis of the hearings that James A. Garfield first had a hold after the Civil War. So that you can see how our country has been perplexed, convulsed, and Today, gentlemen, it's not my intention to read a lecture or a sermon, but I do think that we have to emphasize and re-emphasize, and perhaps there is a legislative responsibility where we'll have to go in and define. It wasn't until just about a month ago that the chairman of FDIC saw fit to say that he was going to announce new ethics rules. Well, like in the case of Congress, the Constitution says we have to be 25 years of age by the time we get elected up here. If we need a code of ethics by that time, it's too late. We don't know the difference between right and wrong and a trust. We never will. And no law, no code is going to govern us unless we do it ourselves. So with that, I thank my colleagues for indulging in this extra lengthy presentation. Recognize Mr. Wiley.
Mr. Chairman, very interesting and very fascinating. I want to commend you for continuing the committee's investigation into the BCCI scandal. I believe that the witnesses before us today can provide very useful information on the BCCI's role with respect to the board and management of First American. As we discussed at earlier hearings, directors and management at the institution have a duty to investigate elements of misconduct of an institution, and I believe that we need to learn today how the gentlemen before us have fulfilled those duties and responsibilities. I would give a special welcome to our former House colleague, Senator Mathias, who will appear here before us, and we'll hear his testimony. It would seem that his actions while he was on the board of First American led to the removal of Mr. Clifford and Mr. Altman from the bank, and it appears that Senator Mathias acted swiftly and decisively when wrongdoing was uncovered at First American. I look forward to hearing your rendition, Senator Mathias, as to how and why Clifford and Altman were removed from First American's board. Mr. Chairman, I believe that the committee has gone a long way in its investigation of First American, and you have truly let the chips fall where they may. You and your staff are to be commended and applauded for that, and I would like to give you my strong continuing support to the committee's investigation and to delving deeper into this scandal, and you have indicated that you are going to do that. I still fear that the committee has only scratched the surface of BCCI's activity in the United States. For example, representatives of the Federal Reserve have told me that the two most crucial sets of documents for the committee to review are the Clifford and Warnke privilege documents, and the documents are to be found in the BCCI Washington office. To date, the Banking Committee staff has not been able to have access to those documents. While Mr. Clifford and Mr. Altman promised production of the law firm documents to the committee, they have not been forthcoming, and these records, I think, are crucial to the committee's understanding of the BCCI affair and must thoroughly be reviewed by our committee staff. Moreover, the testimony we have heard so far raises as many questions as answers to me. I think the committee needs to hear a wide variety of additional witnesses in order to complete our understanding of BCCI and its relationship with First American. There are several classes of witnesses I would encourage the committee to call. First, I believe that there are several former employees of First American and BCCI who would be willing to cooperate with this committee. They should have inside knowledge of BCCI's U.S. affairs and its relationship. Second, other regulators and government officials should be brought before this committee. I do not believe that the Federal Reserve was the only agency responsible for BCCI's activity in this country, and we should hear from other responsible government officials. Third, I believe that state regulators should be called to testify. They played a key role in the regulation of foreign banks in this country up to now and still do. Fourth, I believe that we need to call some of the financial kingpins that BCCI dealt with in this country, and I'm pleased to hear you say, Mr. Chairman, that we will hear from Sintrust officials. Individuals such as Bert Lance, Gaith Ferrone, and David Paul should not escape this committee's inquiry. Finally, I believe that the committee must determine whether BCCI exercised improper political influence in this country. BCCI's state political activities have been well documented in Georgia, and questions still exist concerning its oversized Washington office. I would like to note that federal court pleadings filed in early August against 3 of the witnesses here before us contain the statement that BCCI made or arranged for loans by First American to prominent officials in amounts and on generous terms not otherwise justified. We ought to look into that. The committee ought to get to the bottom of a statement like that to see if there is any smoke or fire. If there was political wrongdoing, then it's our duty to shed some light on those activities regardless of party affiliation. Thank you again, Mr. Chairman, for holding these hearings. I look forward to listening to our witnesses today and continuing our work together on this very, very important investigation. Thank you.
Well, I want to acknowledge your great cooperation and help. As a matter of fact, several months ago you had suggested that we look into BCCI at that time, and only the fact that we've had some immediate urgent action. We had the RTC funding facing us at the time. Now we have the banking bill. But even at that, we're still having hearings on bank mergers, as we've had this week, and we're going to continue. Some of the documents you referred to, remember, I want to remind you that the Federal Reserve Board is conducting its own investigation, and they have possession of some, and then the district attorney in Manhattan, from the culpability standpoint, has also been in there demanding some of the documents. But we don't intend to be deprived of anything this committee needs, and if necessary, insist on the subpoenas being honored.
I'm not suggesting at all that we haven't been very diligent in our investigation of BCCI and other agencies, other financial institutions, Mr. Chairman, and I know that we have indeed had a full platter of work in this session.
I think the gentleman is right to be concerned. I agree with him. We're just on the tip of the iceberg. Mr. Annunzio.
Thank you, Mr. Chairman. You mentioned about the RTC facing us. As you know, we still have the RTC problem facing the committee. Mr. Chairman, I want to congratulate you once again for your relentless effort to seek the truth in this investigation. You've been fair, you've been honorable to the witnesses, you've been fair to the committee, and in the end, I'm hopeful that we will get some measure of the truth to take to the American people, and that's primarily due to your outstanding, really, efforts that you've been putting forth. I don't have a prepared statement, but I want to say to the distinguished panel that's present this morning, our biggest problem that I've found around the country is that we have too damn many directors on these boards that don't ask any questions. If they'd asked questions, you see, we wouldn't be here today, because some of the problems could be resolved. Another thing that's happening is that we have members of the board who have used their positions for gain. That is another problem that the American people don't understand as to the whys and wherefores. I think that as witnesses today, you're all directors, you should tell us how much money you were paid as a director. You should tell us your duties. What did you do for that money that you received as a director? This is our... And you should also try to make the American people understand what your job is. You know, the thing is that I have found when I go home to my district, well, Congressman, you're doing a good job on the investigation, but very few directors are going to jail. What's happened to our Justice Department? We have laws, we have regulations, we have means of dealing with directors, but it seems that for many years that particular problem has not been been examined closely, has not been pursued by the Justice Department. You're here this morning, and I'm looking forward to your testimony. Please try to tell us, in very simple terms, what do you do, what your duties are, so the American people can hear it on television, so the American people can read it in our reports. They'd like to know about a duty of a director. They'd like to know how much money he makes. What does he do with the contacts and so forth? So, Mr. Chairman, I associate myself with your remarks, and I congratulate you.
Thank you very much, Frank. Mr. McCandless?
Thoughts I'd like to leave with our panel. Having followed this rather closely, it appears to me that there are areas here in which we need to take a look at possible legislative remedies. We have a group of outstanding national personalities who are gathered together for the purpose of creating a financial institution, which in itself creates an atmosphere on the part of the regulators that may or may not represent what it is that is in the best interest of our financial institutions. And as a result of that concentration of careers and reflections on our society, the regulators make certain assumptions that because of these personalities, there is maybe not the need to do on a daily, weekly, or in the preliminary period what would normally be done if we did not have the type of people that are involved here. Taking a little liberty, Mr. Chairman, back during World War II, a gunnery sergeant in boot camp told me, and he'd just gotten out of the hospital, assume nothing and you'll never get your rear end shot off. Now, he had another way of saying it. That was excellent advice, but I'm afraid that in the case of this subject, possibly some of our regulators assumed many things that they should not have assumed during the execution and daily activities relating to their responsibility as oversight. I must say in all candidness that in listening to Mr. Clifford intently and reading what had followed, that particular phrase that I just recently referred to must some way, somehow enter into the relationship that the board of directors had and the executive branch of that organization, assuming, again, that because they had gathered together that everything was all right and that they didn't have an individual or collective responsibility to not only the institution that they represented as a board of directors, but to the regulatory system and the United States and the financial institutions. If there are anything that anybody would like to say in terms of a rebuttal on the panel, I'm more than interested in hearing it. Thank you, Mr. Chairman.
Thank you, sir. Mr. Kennedy.
Thanks, Mr. Chairman. Mr. Chairman, first of all, I want to thank you again for holding this hearing. I think for going back a couple years now, you've been insistent on pursuing the responsibility of the individuals on boards of directors and viewing that as a central problem to much of the banking ills and savings and loan ills that have beset the country. And I want to thank you for continuing your efforts in that regard and for gaining not only this committee, but I think the country a better understanding of the responsibilities of boards of directors of these institutions. I have looked through the testimony that the witnesses before us have provided the committee, and it would appear in their testimony that they very much distance themselves from understanding the relationships between BCCI and First American. And I think it's obviously going to be up to individual members of this panel to determine their feelings on that issue. But I think we ought to be concerned, as has been brought to my attention over the course of the last week or two, of the concern on behalf of many of the depositors, and I just wonder whether or not that ought to be addressed even briefly by this panel, that there are still a great many depositors in this area that have money in this institution who are extremely worried about those funds. And I even, as late as last evening, had a labor union that had deposits in this institution that was very concerned about their deposits, and individuals as well. I'm sure Mr. Moran, who represents this area, probably has had many calls as well. So it just seems that we ought to be showing some concern and reminding those individuals out there that they still are covered up to the $100,000, that this has been a relatively healthy institution. It's gotten into some problems in the real estate industry, but the fact is that it hasn't ever cost the taxpayers a penny, and that I just want to make sure that as we pursue the role of the directors, that we don't also create a situation where we end up having people so scared that they think that there's going to be some kind of run on the bank or any kinds of difficulties in that manner. And so I want to thank you, Mr. Chairman, for holding these hearings and for pursuing the concerns that we all have. But I also want to thank the witnesses, but I want to make sure that we reassure the depositors of the fact that their deposits will be covered as well. Thanks, Mr. Chairman.
Thank you. Mr. Army?
Oh, thank you.
Okay, sir. Well, let's see, Mr. LaRocca.
Thank you, Mr. Chairman. I want to add to the voices of my colleagues and thank you for holding these hearings. I think that our central objective today, as in our previous hearings, must be to learn whether United States state and federal banking regulators have appropriate tools to monitor and control foreign banks' relationships with American banks, and to learn whether these have been used appropriately and aggressively in this case. I know that prosecutors are looking into what happened in the past, and as legislators, our job is to figure out what to do in the future. I think that we especially need to determine whether the actions we took in H.R. 6 at the request of Chairman Gonzales and the Federal Reserve regarding foreign banking were sufficient. If they were not, we need to find the best ways to strengthen them. We need to determine not only what First American officials knew and when they knew it, but also what our regulators knew and when they knew it. We need to look at the larger question of whether U.S. regulators can adequately cope with foreign-owned banks operating in the U.S. when information from overseas is hard to verify, and extradition treaties are often inadequate to allow foreign violators to be penalized. And I'm sure that members will try to answer these questions as this week's hearings progress. Thank you, Mr. Chairman.
Thank you, Mr. LaRocca. Mr. Riggs.
Good morning, Mr. Chairman, and thank you for the opportunity. I just would like to greet our distinguished panelists this morning and recollect back to the first hearing that this committee had on the BCCI, First American Bank Shares relationship or controversy, and recall that Mr. Clifford that day, under repeated questioning from this panel, insisted that in characterizing the board at First American Bank Shares as insisted that it was a activist, hands-on type of board, not a passive caretaker board, that it was a board very much in control of and aware of day-to-day operations and management decisions at First American. So I hope in that vein that we will be able to probe somewhat today as to exactly whether or not that this is a activist hands-on board as described by Mr. Clifford, and also at the same time determine the level of your awareness as to the links or contacts between BCCI and First American, whether or not, obviously, you've disavowed any direct knowledge of those links in your written statements, but whether or not, frankly, circumstances should have suggested more concern than was demonstrated by the board, given your fiduciary obligations as board members. So I appreciate the opportunity to pursue that line of questioning this morning. Appreciate your availability. Yield back to the chair.
Thank you, Mr. Moran.
Thank you, Mr. Chairman. Mr. Chairman, particularly because of the fact that
many of the administrators and depositors of First American banks in the Washington area are my constituents. I am especially grateful to the fact that you have shown the kind of diligent scrutiny of the BCCI scandal that you have, and I know that those depositors are appreciative of what this committee has done, and Mr. Nunzio's subcommittee as well. But it is terribly important that we separate the scandalous activity on the part of BCCI from the activities of First American Bank. The drug running and the money laundering and the fraudulent activity that clearly has gone on the part of BCCI has not occurred with any of First American Bank's deposits. The fact is that First American Bank has operated in as responsible a manner as the other banks in this area. We clearly need to get at the ways in which BCCI was able to acquire this kind of shadow ownership and control of First American Bank. But that does not mean that they use that control to commit any kind of illicit activity. And in fact, there is no evidence whatsoever that any kind of criminal activity has been performed by First American Bank. And so it's terribly important, and I know you agree with me, Mr. Chairman, that the depositors in First American Bank in Virginia and D.C. and Maryland know that their money is safe and secure and being properly accounted for. So I would hope, in addition to getting at the bottom of what has occurred and we cannot allow ever to occur again, we also make clear that distinction. Thank you, Mr. Chairman.
Well, thank you, Mr. Moran. Mr. Slattery.
Thank you, Mr. Chairman. I, too, would like to join in recognizing the vigor that you have pursued this matter. Mr. Chairman, I think all of my colleagues on both sides of the political aisle have been impressed by your willingness to vigorously pursue the truth, regardless where it leads us, and I commend you for that. Mr. Chairman, the reason I think this matter is so important to the people of this country is because it is critical at this time when we are considering major bank reform legislation that we get a handle on exactly what our regulatory agencies can do to protect the citizens of this country and to assure that our banking industry is run in a safe and sound and honest manner. And I think that this case raises serious questions about what has gone on within the various regulatory agencies of this particular administration. I am particularly interested, and I applauded Mr. Wiley's observation that we should call before this committee other agencies, particularly the CIA. I'm curious as to why the CIA, and I haven't heard anybody respond adequately to this point, why the CIA was apparently knowledgeable of certain BCCI activities, illicit activities in this country and around the world, and for whatever reason neglected to notify the Department of Justice, the Federal Reserve, the Department of the Treasury, and I don't understand why this happened. And I think it's important that we get an answer to that very basic question. Why didn't existing government agencies share the information that they had with you folks as directors of the bank even, and inquire as to what was going on? So I think that it is very important for us to get a handle on just what our regulatory agencies can realistically be expected to do, especially with regard to foreign-owned financial institutions. So those are the areas that I would like to see some focus on. And again, Mr. Chairman, I thank you for for continuing your pursuit of the truth in this matter. And I want to also associate myself with the remarks made by my friend from Virginia and my friend from Massachusetts in indicating that the depositors at First American in this area and around the country in their various depository facilities, their deposits are safe. And I hope that this hearing and the focus on this BCCI problem does not create panic out there with the depositors in First American. And I think it is important for us to separate the banking activities of BCCI from First American. It's very important that we make that distinction. So, Mr. Chairman, I'm anxious to hear from the witnesses today, and I'm particularly interested also in their observation of who hired Mr. Clifford and Mr. Altman and who could have fired Mr. Clifford and Mr. Altman. And I'm also curious about what they think about all this business, especially with respect to the loans. So I'll look forward to your testimony. Thank you again, Mr. Chairman.
Thank you, Mr. Slattery. If you'll just yield to me, you have a little time. With respect to the CIA, gentlemen will recall that this committee joined me in voting for subpoenas, including documents that we're soliciting from the CIA. It has created quite an upheaval over there in those labyrinthian resorts they have. Also, we have worked with the Intelligence Committee and Chairman McCurdy. But at this point, we don't know yet. The staffs have been meeting diligently with the CIA to make sure that the documents we've subpoenaed are all within the proper scope of the congressional right to know. But I wanted to tell you that, of course, that's...
Mr. Chairman?
Yes.
If I might respond, I'm aware of what you just observed, and the only point that I was making is as we sit here today, it is my opinion that we don't have a satisfactory explanation, shall we say, from the CIA, and this is a matter, frankly, that I believe that the President of the United States should weigh into. He has mysteriously sort of disappeared on this question. The President of the United States is the person responsible for what happens over at the CIA. The CIA reports to him. The Department of Justice reports to the President. The Department of the Treasury reports to the President. They're all in his cabinet. And these are matters that I believe the White House ought to get involved in and offer an explanation to the American public as to what happened within the executive branch of government. So again, Mr. Chairman, I appreciate your vigorous pursuit of the truth.
Well, I better not pursue that because I think we're going into other areas that I think we would be exceeding. All I can tell you is that with respect to that, we are in very harmoniously working with the Committee on Intelligence. We've gone about as far as you can goose a ghost. But anyway, gentlemen, the committee is operating under House Rule 10 and 11 as in its investigative capacity. That is, with legislative purpose in mind. So I'm going to ask you to stand and raise your right hand. Do you swear that the testimony you're about to give this committee is the truth, the whole truth, and nothing but the truth? So help you God. Thank you. Well, Senator, let me say that I never dreamed you had gone from the political to the banking until I read your name in the newspaper not too long ago. But I recall with a great deal of, let's say, nostalgia and pleasure. When we first met, you may have forgotten, I was newly arrived in the Congress, and we met at the old gym in the Longworth building. And I'd see you almost every day. You'd come in a big hurry, and you'd live with your kit, and now and then we'd converse, and you were rushing back to your district in Maryland. And then subsequently to that, of course, you successfully ran and got elected to the U.S. Senate. So it's a pleasure to see you. We want you to know that first, we're grateful to you for your cooperation. We sent the letter as well as the other gentleman, and we're very, very much pleased and thankful that you responded in a harmonious and cooperative way. We do take note of that. If there's no objection from the other panelists, we'll recognize you first if you have a statement, Senator.
Thank you very much, Mr. Chairman, members of the committee. Mr. Chairman, just let me say I remember those early days very well. And,
I don't know if you were here by the time we got the new gym in the Rayburn building, but you'll remember that old gym. That was just a little old small room. I think it could fit in that corner over there. So we didn't have too much, but I always thought it was, in fact, I respected very much your fitness and your desire to stay that way. And I'm delighted to see that you look very good. But I don't know if you ever enjoyed the benefit of the house gym after the Rayburn building was opened. So anyway, I'm glad you do remember.
Senator Mathias suggested that maybe a few less of those Senate receptions had an effect upon his health, too, why he looks so healthy.
Strange things happen when they get to the other side.
well, it looks to me as if the chairman's doing pretty well himself. So. Mr. Chairman, I currently serve as a member of the Board of Directors at First American Bank Shares, and I'm chairman of a special oversight committee of the board, the charter and activities of which I'll describe in a few minutes. I'm also a member of the board of directors of First American Bank of Maryland, and it's in my capacity as a member of the board of bank shares, as well as chairman of the special oversight committee of bank shares, that I appear before the committee today. And if I may, Mr. Chairman, I'd like to introduce the other who are with me: Jack Beddoe, Paul Adams, Vince Scaffoni, and Charles Stoffaker. Jack Beddoe, who is on my right, is the Chief Executive Officer and a Director of First American Bank Shares. Paul Adams is the Chief Operating Officer and also a Director of Bank Shares. Vince Scaffoni is Senior Vice President and Treasurer. Charles Stoffaker has served as an outside Director of First American Bank Shares since February of 1989. I appear today at your invitation, and I welcome this opportunity to respond with facts about First American to some of the intense publicity concerning the Bank of Credit and Commerce International, which is commonly called BCCI. We hope to make it clear to you and to the public that First American's banks have not committed any wrongful or improper banking practices, and that their operations are not in any way controlled by BCCI. We appear today on behalf of what is the leading financial institution in the Washington area and its many dedicated and professional officers, directors, and employees. Our banks are fortunate to serve several outstanding communities up and down the eastern seaboard of this country and to participate especially in the growth and development that has occurred in the greater Washington area. Having had, as the chairman recalls, the privilege of representing the people of Maryland in the Congress, I take a particular interest in First American service to the people of Maryland. I would pause just to comment that First American is really a part of American banking history because it's one of the oldest American bank holding companies. It was originally incorporated as the Morris Plan Corporation of America, and it was famous nationwide. In another period, with different ownership, it traded under the name of Financial General. Of late, the significant accomplishment of the employees of this long-established institution on behalf of the communities that it serves have been completely ignored, and instead the institution has been broadly and unfairly maligned as a result of events that are external to it and beyond the control or the influence of the people who have served the bank so loyally. My own involvement with First American began in 1987 after my service in the Senate had ended. Clark Clifford, whom I've known for many years, invited me to join the board of First American Bank Shares and First American Bank of Maryland. And I was willing to accept this responsibility in part because I viewed this as a way to continue to be involved with the community that I formerly represented. Although I intend to speak at greater length about my role as a director of First American Bank Shares, I would like to speak first about my experience with First American Bank of Maryland, because it involved the direct oversight of banking operations, and I think addresses some of the interest expressed by committee members already this morning. My experience at First American Bank of Maryland, I think, is also very germane to the issue of whether BCCI controlled First American, a question on which there has been considerable speculation and investigation. First American Bank of Maryland is one of 7 subsidiary banks that serves thousands of communities from New York to Florida. In total, these banks employ about 5,500 people. Some of these employees, for instance, like Jack Beto, who is here today, worked for First American before it was First American. Changes of name, changes of corporate ownership haven't interrupted the consistent service of these people. The primary business of this institution has always been retail banking, local banking. The Maryland Bank, for instance, has over 100,000 deposit accounts and about 30,000 loan accounts of various types. The Maryland Bank has its own independent board composed of conscientious directors, many of whom I've been fortunate to know for years. In my experience, the officers and directors of First American Bank of Maryland have managed their own operations and have made their own decisions with very little or no input from above. Paul Adams, who is here today, was the president of the Maryland Bank from 1982 to 1989 when he moved up to become the chief financial officer of First American Bank Shares. Paul did a masterful job of leading the bank in Maryland. When Paul became president of the Maryland Bank in 1982, it was a marginally profitable bank. Today, First American Bank of Maryland is a well-capitalized bank with $1.5 billion in assets, which is nearly 6 times the size when Paul took it over. The bank accomplished this feat by participating in and by fostering the dramatic growth that has occurred in the northern and eastern perimeters of the Washington metropolitan area and along the industrial corridor that connects Washington to Baltimore. And I think it's fair to say that the Maryland Bank has become an integral part of these communities. But the Maryland Bank is not alone in this accomplishment. Each of the subsidiary banks has independent, dedicated leadership that has served its respective communities well. Our efforts have always been aimed principally at the retail level, serving many small depositors and customers. The First American banks together have close to 1 million deposit accounts and to 500,000 outstanding loans. Our commitment to the communities that we serve is particularly evident in the lending and investment decisions made by the First American banks. You will recall, Mr. Chairman, that in the late 1970s, the Congress passed what I viewed as long-needed legislation entitled the Community Reinvestment Act. I'm sure the chairman remembers that very well. As you know, this legislation requires banks to meet certain minimum levels of investment in low to moderate income housing projects and in loans to low or moderate income individuals within the bank's community. First American has been a leader in achieving the goals of that legislation. Acting again through the subsidiary banks, First American has reinvested at every economic level of the community it serves. For instance, as of August 30th, 1990, the 3 subsidiary banks in the greater Washington area alone had invested nearly $1.4 billion in CRA qualified projects. And I think it's this kind of activity, not involvement in BCI's wrongdoing, characterizes First American's operations. And those of us sitting here who are familiar with the real day-to-day operations of First American's banks, as well as the thousands of employees who have devoted their professional lives to this work, know that the allegations that BCCI controlled the operations of First American Bank are extremely unfair and injurious to the good name of our banks and to their employees. Indeed, we find it particularly upsetting that speculation concerning BCCI operational control of First American continues to be offered when William Taylor, the staff director of the Federal Reserve's Division of Banking Supervision and Regulation, just this Tuesday again confirmed in testimony to the Senate that in spite of exhaustive investigative effort, the Federal Reserve has been unable to find any exercise of operational control by BCCI over First American. Now, all of the efforts of these subsidiary banks are tied together through the parent holding company, which is First American Bankshares. Unlike many bank holding companies, First American employs a significant operational staff of approximately 300 people. Their respective functions relate generally to functions at the subsidiary bank. For instance, Bankshares has its own separate loan review function, the purpose of which is to review the lending activity at each of the subsidiaries to assure that company loan policy is being followed and that loans are properly risk rated. Similarly, Bankshares has its own audit staff, which audits the activities of all of the banks. It is my judgment that First American Bankshares, like the subsidiary banks, is staffed by prudent and attentive officers and directors. When I joined the board of Bankshares in 1987, it had already grown to be the largest bank holding company in the Washington area with total assets in excess of $9 billion, which is up from $2.6 billion in 1982. On a consolidated basis, the performance of our banks during my first 3.5 years from 1987 through mid-1990 was solid and profitable. During this period, the exceptional performance of the Virginia, Washington, and Maryland banks was offset to some extent by what I have to characterize as disappointing earnings results from the New York and the Georgia operations. It was our understanding, however, that First American's investment in its New York and Georgia banks reflected strategic decisions that were favored by our parent holding company, Credit and Commerce American Holdings, commonly called CCAH, and its shareholders. Moreover, First American's overall asset quality during this period remained exceptionally high. At the beginning of 1990, Bankshares had $11 billion in assets, and it ranked among the 50 largest commercial banks in the United States. At the end of the first quarter of 1990, all of the indicators suggested that the bank was well positioned for the future. And this, Mr. Chairman, was not just the opinion of First American's directors. It was the opinion of the Federal Reserve Board. In particular, the examiners at the Federal Reserve informed the board of directors in February of 1990 that although operating income had declined slightly, that total assets had increased 15.8% since the prior year's inspection, and that the net interest margin of the company was in line with its peer group banks. The Federal Reserve concluded that First American Bankshares was fundamentally sound, with some modest weaknesses that were correctable in the normal course of business. Now, as we all know, since that time, the country as a whole, and the Washington region in particular, have experienced a serious recession, which has been especially hard on real estate values in the Washington area. By the end of 1990, First American had realized significant losses for the year from its banking operations for the first time in its history. There has been much debate and commentary on the cause of this recession, on the overall health of our economy, on the consequences to the banking system of past changes in federal legislation. I think these issues are beyond the scope of my testimony today, but I do wish to stress that the losses experienced in this past year by First American are due largely to the external forces and events, which could be neither controlled nor, for that matter, very easily anticipated by First American's managers or directors. Fortunately, First American, unlike many other financial institutions, has a solid capital base that will help it to endure the economic adversity currently faced by virtually all banks. Now, the challenges that the past year has brought to First American have, of course, not been limited to the economic problems that have affected the entire industry, that have affected all banks. Beginning in May 1990, the ownership of First American's ultimate parent became a subject of considerable media and congressional attention. As I indicated earlier, when I left the Senate at the end of 1986, Mr. Clifford asked me to become a member only of the board of the Maryland Bank and the Bank Shares Board. He did not invite me to become a member of any of the senior holding companies above bank shares. I've attached as an exhibit to this testimony an organizational chart that illustrates the relationship of First American Bank Shares to its senior holding companies and to its subsidiary banks. I hope that members of the committee, Mr. Chairman, have that chart available, because I think it is a valuable illustration of that relationship.
We can include that in the record if you wish, sir.
Yes, Mr. Chairman.
Hearing no
I think,
objection, it's ordered.
well, I've provided because I think it is important to have an understanding of the organizational hierarchy and the accompanying allocation of authority and responsibility, which is essential for an intelligent discussion of the issues of concern to this committee. As you know, First American Bank Shares is a privately owned bank holding company. And as this exhibit indicates, the stock of First American Bank Shares is 100% owned by First American Corporation.
Mr. Chairman, could we get a copy of that? Perhaps the staff might Xerox. I don't think it's in the material that we were given.
No, it's not in the material, but we put it in the record.
Let me...
Gentleman wants a
I
copy,
understand,
sir.
but if Senator Mathias is going to be pointing to it, it might be useful to follow it. If the staff might Xerox. Thank you, Mr. Chairman. Excuse me for the...
To repeat, Mr. Chairman, the stock of First American Bank Shares is 100% owned by First American Corporation, which is in turn 100% owned by Credit and Commerce American Investments, which is sometimes referred to as CCAI. And that, in turn, is 100% owned by Credit and Commerce American Holdings, or the CCAH. And it is this ultimate parent, CCAH, which in turn is owned by the individual shareholders. Until recently, the quarterly meetings of bank shares that I attended focused almost exclusively on the financial results of the subsidiary banks. There was no discussion of the operation of the senior holding companies, nor until recently was there discussion of shareholder satisfaction with bank shares performance. I can recall one conversation with Clark Clifford prior to accepting a position on the bank shares board, during which I had inquired about the shareholders. And he responded that they were the most wonderful people. He said they were very wealthy individuals who had entrusted the operations of First American completely to him, who never interfered in his management of the institution, and who were in this investment for the long term. And he said that their attitude was so firm on this point that they didn't even seek dividends, but instead wanted the earnings reinvested to expand the bank. And I also understood generally that the shareholders sought some degree of anonymity, and that Mr. Clifford and Mr. Altman would, and in fact did, control communications with them. So accordingly, until very recently, as I'll soon describe, I had no contact with any of the shareholders. Communications with the shareholders were conducted exclusively at the CCAH level, which you can see on the chart, under the direction of Messrs. Clifford and Altman. I understand that the corporate records of CCAH were maintained at the law firm of Clifford and Warnke and were not kept in First American's offices. It is, of course, the alleged relationship between this senior holding company, CCAH, and BCCI that has been the subject of so much attention, which has unfairly affected the First American banks. Now, it was in May of 1990 that the ownership of CCAH became the subject of renewed interest. Regardy's magazine featured on its cover a picture of Sheikh Zayed, apparently to suggest the author's view that the bank was improperly owned by overseas interests. I was aware that First American's parent corporation was owned by Middle Eastern investors, but I was not then, and I am not now, opposed to foreign ownership of United States corporations, whether they be financial institutions or other businesses, because free movement of capital is essential to the health of our system. In my view, regulation discriminating against foreign capital would be morally offensive and economically disastrous. The fact of foreign investment in First American's parent corporation was not troubling to me as a director, or for that matter, as a citizen. But the article did, however, raise certain questions that I and others at First American viewed very seriously concerning the possible involvement of First American in BCI money laundering activities and the possible influence of BCCI over First American's lending decisions. There were some prior allegations of a connection between BCCI and First American that surfaced following the indictment of BCCI and certain of its officers on charges of money laundering in October of 1988. And in a letter to the board of directors and the president and chief executive officer and the employees of First American, Clark Clifford denied that BCCI had ever had any financial interest of any kind in First American, or that First American had ever had a financial interest of any kind in BCCI. Several months later, the Federal Reserve appeared to confirm Mr. Clifford's statement of that relationship between BCI, the individual shareholders, and First American. And I would note, Mr. Chairman, that it was at a First American Board of Directors meeting that was held in February of 1989 that officials of the Federal Reserve reported to the board that the staff of the Federal Reserve had completed a special review of the relationships between BCI and First American in connection with the application by First American to acquire the Bank of Escambia. The investigation, which was discussed with this committee, I believe, in recent testimony by officials from the Federal Reserve, concluded that there was no evidence of BCCI ownership or control of First American inconsistent with the representations that had been made at the time of the original acquisition and that First American's corresponding banking relationships with BCCI were conducted in the ordinary course of business and were properly monitored. The Federal Reserve's conclusions were reported to the Board of Directors by the Vice President of the Federal Reserve Board of Richmond, Mr. Lloyd W. Bastian. Nevertheless, when allegations of improprieties relating to BCI resurfaced in 1990 with the publication of the Regardes article, First American's chief auditor, James Lewis, was asked to conduct a thorough audit of First American's operations. This audit, which began in May 1990 and concluded in December 1990, involved an extensive review of transactions with BCCI. It found no adverse financial effects on First American by reason of these transactions, and it found no flow of funds indicative of money laundering. It also found no evidence that any loan decisions were being controlled by BCCI. The results of this audit were consistent with the findings of the Federal Reserve as explained to this committee in testimony 2 weeks ago by Mr. Robert P. Black, the President of the Federal Reserve Bank of Richmond. Mr. Black indicated that since the Federal Reserve received the first tangible evidence of BCCI loans to the shareholders in late 1990, a comprehensive, coordinated, and simultaneous inspection of the holding company and examinations of the subsidiary banks had occurred that required 52 examiners from all 12 Federal Reserve banks. The Federal Reserve team found no evidence of transactions with BCCI other than in the ordinary course of business, no evidence of the abuse of the banks, no evidence of significant exposure of First American to financial risk in connection with any BCCI transactions. And this conclusion, as I noted earlier, was restated by William Taylor in his testimony before the Senate Banking Committee last Tuesday, when he agreed with Chairman Regal that despite intensive investigation, the Fed had yet to find any probative evidence of operational control over First American by BCCI. Now, the results of the Lewis audit were reported to the Board of Directors in December 1990 and were important to all of us because they confirmed that the bank was not being used by BCCI in any improper fashion. And for a time, it also seemed to lay to rest the allegations of BCCI control. The directors, however, had new issues that we felt needed greater attention. As I have previously stated, although 1990 had started out as another good year for the bank, the 6-month period following the Federal Reserve's favorable report to the bank shares directors in March of 1990 were not good for the region. We recognize this circumstance, as did the Federal Reserve. Other banks in the area experienced similar or even worse deterioration. Thus, in late 1990, the Bank Shares Board, following consultation with the Federal Reserve, created a special oversight committee of the board. And this committee identified 2 areas that needed prompt attention: the need for an infusion of additional capital and the need to conduct a thorough review of asset quality and credit review procedures. First American has in the last 6 months realized great success in addressing capital needs that have arisen as a result of the rapid and dramatic changes in the economy. In the first 6 months of this year, the Abu Dhabi investors have provided capital support approaching $200 million. In addition to this capital, the holding company received in April approximately $6.8 million from the sale of First American Data Services. It also received $71.5 million from the sale of Valley Fidelity Bank and Trust Company. Now, because of these efforts and the long-term view of our Abu Dhabi investors, First American today has a total risk-based capital to asset ratio of 9.86% of assets. And that exceeds by 36% the current minimum ratio of 7.25% established by the Federal Reserve. The ratio compares favorably to an average for Washington area institutions of roughly 8.1%. Its measure of Tier 1 capital to risk-weighted assets is 8.56% as compared to the 3.625% that's currently required under the Basel standards and minimal federal guidelines. Notwithstanding this strong record of accomplishment, the Oversight Committee and First American's management continue actively to explore a variety of possible additional steps to improve capital and intend to continue to move vigorously in maintaining and enhancing First American's capital position. During the past year, improved policies and procedures to administer First American's overall loan portfolio have been developed and implemented. A revised credit review function coordinated by bank shares for all of its subsidiary banks for identifying and classifying problem loans is now fully implemented. Bank shares has also implemented improved programs to provide the necessary training for loan officers and to conduct on-site loan reviews and classifications at various banks. In addition, based on First American's initiative and guidance, several of the subsidiary banks have created oversight committees to review problem credits and to develop plans to resolve them. Increased controls are now in place to monitor performance and to resolve troubled credits. Initially, the Oversight Committee believed that its principal focus needed to be on the capital needs of the bank and on a thorough review of the bank's asset quality and loan procedures. However, questions about the ownership of CCAH resurfaced once more in early 1991. Journalistic investigations were accompanied by legislative and executive branch inquiries. Robert Morgenthau, the district attorney for Manhattan, was similarly interested. In the light of these developments, the committee determined that it needed to extend the reach of its activities to include closer monitoring and evaluation of the various investigations and the attendant management questions. Now, since the activities of Mr. Clifford and Mr. Altman were the subjects of these inquiries, the directors collectively believed that greater direct involvement by us was necessary to ensure that independent judgment was brought to bear on the bank's behalf. Accordingly, I joined other directors of the bank in meetings with Mr. Morgenthau, with Mr. Taylor of the Federal Reserve, with Senator Kerry, who chairs a Senate subcommittee that has been examining this issue for some time. We have also met with the representatives of the joint liquidators of BCCI. We have met with officials of the Bank of England. By these meetings, we sought to pledge the bank's cooperation in the effort to bring to light all of the relevant facts and to learn for ourselves more about the allegations that we viewed as unfairly injuring the bank. In the 6-month period from February through July of this year, it became increasingly clear that the continued presence of Messrs. Clifford and Altman would be detrimental to First American because of the continuing publicity relating to BCCI. As you know, Mr. Clifford and Mr. Altman were the focus of much of this publicity. After various discussions with the directors and the Federal Reserve concerning their role in First American's management, Mr. Clifford and Mr. Altman decided to resign on August the 9th, 1991. Now, this was obviously a painful decision for them because they had spent many years in running this institution. And as this committee has been assured, they firmly believe that they will be vindicated of any wrongdoing. Nevertheless, they, like the directors before you today, recognize that the publicity centering on their alleged relationships with BCCI, whether justified or not, would adversely affect confidence in their leadership and therefore in the institution itself. My agreement with this decision should not be misconstrued. I did not reach a judgment that Mr. Clifford or Mr. Altman had committed or condoned any violation of law, but only that their continued leadership would no longer serve the best interests of this important financial institution. Whether any wrongdoing has been committed by any party is being vigorously investigated by several law enforcement bodies. Mr. Clifford and Mr. Altman are, of course, entitled to the same presumption of innocence and the same opportunity to defend themselves as any other American citizen. In the light of the complex, disputed, and incomplete factual record, it would be highly inappropriate to speculate on the possible legal culpability of any party. And this is particularly true with respect to assertions allegedly supported by records supposedly kept by BCCI, since a good deal of the information that comes to us indicates that BCCI did not keep regular records, as may well have deliberately manufactured records. Now, immediately after accepting the resignation of Mr. Clifford and Mr. Altman, the remaining First American Bank shares board members contacted Mr. Nicholas Katzenbach, who, as you know, was formerly Attorney General of the United States and also formerly General Counsel of IBM, and asked him to meet with us to discuss the possibility that he would assume the chairmanship of First American Bank shares. Through several meetings in the ensuing days, we were able to frame conditions that would permit Mr. Katzenbach to accept this responsibility. Since the resignations of Messrs. Clifford and Altman in mid-August, the First American directors, working with Mr. Katzenbach, have sought to achieve three primary objectives. The first is to bring in a new chief executive officer as a successor to Jack Beddoe, who is past due, I might say long past due, his scheduled date for retirement. Jack has had a long and productive and distinguished career at First American. As I said earlier, he was with the bank before it was First American. His calm and steady leadership has played an important role in helping to guide First American successfully through this turbulent period. The Chief Executive Officer search has gone well. We expect to make an announcement in the near future. The process has been quite deliberate and thorough. With the assistance of a consultant who specializes in the recruitment of senior executives in the banking industry, we started with a list of more than 30 prospective candidates, all of them from outside of First American, and interviewed approximately one-third of that number. We've been especially pleased with the level of interest in this position among very qualified individuals. The new Chief Executive Officer will bring to First American both an impeccable reputation and a wealth of banking experience. Our second primary objective is the establishment of a trust to hold at least 75%, ideally 100%, of the stock of CCAH or CCAI. Such a trust arrangement was first proposed about 6 months ago by the Abu Dhabi shareholders and the Federal Reserve in response to the Federal Reserve's requirement that BCCI come up with a plan for divestiture of whatever interest it may have in First American. The Abu Dhabi shareholders have been willing to submit their shareholdings to this trust, despite the fact that there are no allegations that their shareholdings have been financed by BCCI or are in any way improper. The concept was and is that the trust will have the power to exercise the shareholders' franchise. Progress on the details of the trust arrangement languished for several weeks after the provisional liquidators of BCCI were appointed in early July. Nick Katzenbach, in the discussions leading up to his nomination as chairman of First American, immediately recognized the benefits offered by the proposed trust arrangement. His insistence that it be implemented as soon as possible has prompted renewed progress on the trust arrangement. Although some of the technical details are still being worked out by the lawyers, a majority of the CCAH stockholders, as well as the British and Luxembourg liquidators, have agreed, one, that the trust will have exclusive authority to vote the stock of First American's holding company that is placed in it, and the trust will be independent of any control by the stockholders. This trust arrangement will enable First American to proceed now to a new stage in its life without becoming entangled in disputes regarding its ultimate ownership that could take years to resolve. First American's ability to compete successfully in this difficult economic climate has been undercut by the considerable confusion that has been created by publicity related to BCCI. Because it has been alleged that BCCI controlled shares of CCAH, First American has been associated with BCCI in much of this publicity. And this has unfairly tarnished the reputations of First American and its many employees. It's important that this committee understand and make clear to the public that the alleged ownership of CCAH shares by BCCI does not reflect adversely on the integrity of First American or of its employees. It is undisputed that no irregularities, no illegal transactions were discovered by the Federal Reserve in its detailed audits of account relationships with BCCI. The Federal Reserve has not alleged that any First American employees have been involved in illegal activities. In particular, the Federal Reserve found no evidence of any money laundering activities at First American banks. It is also undisputed that the shareholders of CCAH have not taken money out of First American, but have in fact contributed substantially to the financial strength of First American's banks over the years. The shareholders have contributed in excess of $400 million in capital, and no dividends were ever paid to the shareholders. All of First American's substantial profits were reinvested in the institution. I would note that the Abu Dhabi shareholders, whose purchases are not alleged to have been financed by BCCI, have been particularly cooperative over the past year. First American's ability to deal with the current recession and the real estate market downturn has been substantially enhanced by the willingness of the Abu Dhabi shareholders to act as a source of strength. Current economic conditions do not have the benefit of such investor support. The central concern of this committee and of the federal regulators is whether BCCI violated the Bank Holding Company Act by acquiring secretly ownership of a majority of CCAH stock through loan agreements which BCCI is alleged to have entered with certain individual shareholders. Now, there's no question but that none of the directors before you today, none of these directors nor any other current employees of First American had any knowledge of these agreements or of BCCI's alleged ownership of CCAH. Indeed, we have still never seen these loan agreements. I have discussed the alleged ownership interest of BCCI in CCAH stock with the representatives of the joint liquidators of BCCI. And even the joint liquidators were unable to confirm that BCCI in fact owns CCAH stock. They explained that no CCAH stock certificates appear to be in BCCI's possession, and that their claim to ownership will rest on certain contracts whose validity may be disputed. It may be true, when all the disputed facts are settled, that a violation of bank regulatory law will be proven. At present, that is purely a matter of speculation. But what is not speculative, Mr. Chairman, is that none of First American's employees are in any sense at fault in these events. And I seek your cooperation in preventing any further injury to the reputation of the First American banks and to the employees that have served their communities so well. In conclusion, Mr. Chairman, I wish to note that First American has been gratified by the high degree of loyalty and confidence that its customers and depositors have displayed in recent months, despite the highly sensationalized and misleading publicity. Once again, Mr. Chairman, I thank you and members of the committee for this opportunity to appear here today.
Thank you very much, Senator. Mr. Adams, do you have a statement?
No, I don't.
Mr. Beddoe?
No, I do not have a separate statement.
Okay, Mr. Scapone?
No, I do not.
And Mr. Stoffaker? I'm going to ask unanimous consent that I place in the record to the later reporter after my opening statement an order. I neglected to do this and I apologize, but in my consternation at arriving late, I overlooked it. It's a very important article that's just come out in the latest edition of the World Press Review for October 1991, and it reprints articles from Italy, El Mondo, and you know, they state the non-existent controls, ignored warnings, permissive laws, criminality has been given the green light, and now European community directives to prevent money laundering risks no longer are being of any use. The reason is that a no man's land now puts Europe in two. So it goes on and points out how vulnerable the thing is. Then they have another article by the Oslo, Norway, Dagens Næringsliv, in which the title of it is Around the World's Financial Havens by Tom Martinson. And they point out the existence of these havens worldwide, from the Caribbean to the Pacific. I'll just read: the tax havens of the Pacific are more of an unknown quantity. Japanese, American, and Australian capital is now being lured to the region's mini-states. And then they mentioned what used to be the New Hebrides, and after their independence they're now known as the nation of Vanuatu. All the way to the Cook Islands, out of New Zealand, South African capital in Mauritius, and then they go to Europe. So that I do this because I want, and I'm going to get copies for each member present here so you'll have it, to indicate the seriousness of the task we have confronting us. Senator Mathias mentioned about the Basel agreements. Well, those were the result of the pressure of the Europeans principally, but mostly the Bank for International Settlements, of which we're not a voting member, and the imposition and the convergence of capital standards that resulted. And I want to remind the gentleman and also you board directors that come January you'll have the next increase in your reserve requirements mandated on account of the Basel agreement. So that will complicate the picture if we get the refinancing plan through on the BIF. And I just want to mention this because we're going to have to look to perhaps another committee, Foreign Affairs, and also to the executive branch to exert some leadership in bringing about some world consortium so we can control this. Now, if the gentlelady controlling the time, I'd like to get my 5 minutes on questions. When Mr. Clifford and Mr. Altman were here, I was very critical of their the multiplicity of their activities and their responsibilities and their power. I said they wore so many hats. And in this case here, though, Senator, you're a director of the First American, but your law firm, Jones Day, is also represents all the directors here today except Mr. Scafone, as I understand. Now, another Jones Day partner, Mike Bradfield, was the general counsel of the Federal Reserve during most of the investigations of the BCCI First American relationship. We also know that Jones Day has hired at least 3 prominent lobbyists to reach us in the Congress with respect to the investigation of the so-called investigation of BCCI. Now, my question is this. If you had your druthers right now, and that is, if you had to choose between 2 options, one being a member of the board and the other as a member of the law firm hired by the directors and the bank, which one would you give up? And what would be the purpose of Jones Day hiring lobbyists to come here to the Congress? On behalf of what? In behalf of the First American? In what way?
Well, Mr. Chairman, I think you point to a question which is an important one, and one that I share as a serious subject. That we have to keep very careful control over interests and not permit a intermingling of interests in any improper way. And we've been very conscious of that in this situation. Jones Day had no relationship whatever to First American Bank in any business at all until the difficulties which have occurred in the past several months. The help of Jones Day was acquired as a result of a decision of the Special Oversight Committee. And I might refer to Mr. Beto, who is a member of that committee, who would comment, I think, objectively on that decision.
Yeah, I might say, Mr. Chairman, the selection by that committee, that Oversight Committee, which is composed of the Senator, Mr. Stoffaker, Mr. Adams, and myself, that committee made the selection of Jones Day without any pressure from the Senator. The Senator didn't involve himself in it. We knew some of those people, and we've dealt directly with those people rather than through the Senator. And we think they have served the committee well. And in some other assignments that I've decided to give them, they're serving me well.
Well, be that as it might, there's another question here. Were you aware, we have this report, this information, that First American became the source of loans to foreign political figures and defense individuals. So for instance, in New York, the First American of New York seemed to have been entrusted with that. And it seems to me that given the nature, for instance, in Washington, D.C., First American loaned money to such people as the embassy officials, the Jordan military, the Saudi National Guard officials, Saudi military officials, Saudi Army officials, United Arab Emirates military officials, Algerian military officials, Guatemalan military officials, Lebanon militia officials, and Kenya military. Were you all aware that this was a pattern of lending here? And what would be the reason behind it? It may be some explanation, but it seems to me that this would follow the pattern that had been outlined to begin with by Mr. Aberdeen in the document that we submitted for the record when, together with a former employee of the New York Bank, scoped out what their intentions were for the American market and their involvement in it. why this select group? We even have a note that First American employees attended a reception in honor of Iraqi military in January 1988. So, but the loans, you know, why would First American be the source of that banking loan? I just raised that issue.
Mr. Chairman, I'm not familiar with the specific loans you mentioned, but most foreign countries have embassies in this country, have missions in this city. They do business. All the banks in Washington compete for that business. And we have competed through our Washington Bank with a lot of local business through embassies and missions from foreign governments. And I might say, I don't believe we have the largest percentage of those loans. I think other banks in town have more of that type of loan than we do.
All right, sir. There was one final question I have here for the moment, and I also will ask unanimous consent that I and any other member be permitted to submit questions in writing to the gentleman. When you get the transcript of these proceedings for your oversight and correction, hopefully by then you'll have any questions that are to be submitted for your reply for the record. Senator, in your August 2nd letter to Mr. Taylor and Mr. Mattingly of the Federal Reserve concerning the removal of Mr. Clifford and Mr. Altman from the board, you stated, and I quote, "During the past week there has been confusion with respect to your position on the question of Mr. Altman and Mr. Clifford remaining as officers and directors of First American." I wonder if you could enlarge on what were you referring to about this confusion? Did the Federal Reserve seek to remove all the directors or just Mr. Clifford and Altman? Would it have been in the best interest of First American for all the directors, including yourself, to have resigned?
Well, Mr. Chairman, the confusion that I referred to in that letter was simply this, that one of the responsibilities of the Special Oversight Committee was to maintain close liaison with the regulators. And in pursuit of that responsibility, I talked frequently to Mr. Taylor and Mr. Mattingly and received from them the very strong impression that it was their judgment that there had to be a change of management in the bank, or to put it more bluntly, that Mr. Clifford and Mr. Altman had to go. And they also made it very clear that they felt it was the responsibility of the board of directors to bring about that change. I was simultaneously having discussions on the same subject with Mr. Clifford and Mr. Altman, and they were having independent conversations with Mr. Taylor and Mr. Mattingly. And I would find that when they would return from their conversations with Mr. Taylor and Mr. Mattingly, they apparently brought a different point of view than that had been expressed to me. And that was the confusion that I was referring to in that letter.
Thank you. My time's expired, Mr. Wiley.
Thank you very much, Mr. Chairman. And I would say, gentlemen, that there are so many unanswered and appealing questions here that I hardly know where to start. But I'd like to start out by suggesting that adding to the confusion here, to me, is this organization chart of bank holding companies and subsidiary banks of First American. We have.
I agree. It is a very confusing pattern.
Why this complicated structure? Were they trying to blind somebody with footwork, or was there a reason for this, Senator? We have starting out here a holding company from the Netherlands Antilles. What other companies did that holding company own? Do you know, or was it just Credit Commerce American Investment of the Netherlands that they own?
Of course, this structure was created back at the time of the acquisition of Financial General by the First American investors, and that was long before I had joined the board. So I don't have firsthand knowledge.
So you really don't have any firsthand knowledge of why they entered into this very complicated arrangement, it seems to me. You get into the picture with the First American Corporation of Virginia. You're on their bank holding company board, right?
First American of Maryland.
First American of Maryland.
And First American Bank Shares, which is the lowest of the 4 levels of the holding companies.
Let's see, in your testimony when you start out, I currently serve as a member of the board of directors of First American Bank Shares, Inc., and then American Bank of Maryland.
Bank Shares is a Virginia corporation.
Yes.
Yes.
That's right. So you're on the board of 2.
Right.
Well, I just kind of wanted to point that out as I say, adding to the confusion of trying to get some answers here. You wouldn't have any opinion as to why this complicated arrangement for holding company, one holding company owning another holding company, another holding company, another holding company, and then finally you get down to the bank, why that would be entered into?
Well, I'm mindful of the chairman's admonition earlier that we can't assume anything in this world, and
Okay.
I don't want to assume.
Anybody on the board?
I've always have assumed,
speculate?
however, that there were some tax implications that affected that structure, but perhaps Mr. Beto, who was present, can throw some light on that.
I hope so.
Those 3 corporations, CCAH, CCAI, and First American Corporation, were formed before the takeover. They existed, and then it was First American Corporation that made the tender offer to acquire Financial General back in 1982. They exist solely to own the company beneath them, and it was my understanding at the time that they were formed to facilitate tax payments, dividend payments at minimum tax. There have in fact been no dividends paid, so it was a useless exercise, but I think that was the purpose in the beginning for setting it up that way.
You sort of have the feeling that there ought to be another box at the top, or I do, that has BCCI in it. That's just a side observation that you don't have to comment on. I have in my possession here an exhibit from the Board of Governors of the Federal Reserve from Shahid Jamil, who is with BCCI. Do you know that name? Do any of you know the name? Okay, he's with BCCI, and he has written a communication half-yearly review of FAB. It says, please find enclosed a review of First American Bank shares for the half-year ended June 1984. The bank has achieved the budgeted figures for deposits and exceeded that loan. Then he has down here, perhaps Mr. Altman may require some assistance and guidance in enabling him to reach the budgeted income figures in the second half of 1984 without further increasing their loan portfolio and raising the loan deposit ratio beyond the existing level. Then there's another note in Mr. Shahid Jamil's handwriting. I have since discussed the half-yearly results of FAB with Mr. Altman to draw his attention to the concern about the group of his income falling off. My question is, why would BCCI be reviewing First American Bank shares if they had no interest in it? Any speculation?
Well, first, let me say I don't know that man, and I'm not familiar with that memo, other than having heard about it just recently. I was not familiar with it at the time. I understood the situation. BCCI served as investment advisors to the CCAH shareholders, and in fulfilling that role, they could very well have been interested in what to advise the shareholders.
Is that normal practice for them to be advisors to other shareholders?
Well, this is an unusual situation in that there were just a small number of shareholders, so each shareholder had presumably a large interest, and he could very well have had an advisor to help him, but I just don't know anything about that.
Don't know. Do you know Mr. Nakvi, Nakvi, N-A-Q-V-I?
I do not know him personally. I've seen his name.
Okay. Mr. Shoab, I don't know how to pronounce all these Arab names, Shoaib.
I do not know him personally.
Nobody on the panel knows either one of those gentlemen. Well, okay. That's in line with what we've been getting in the way of information. That's no reflection on any of you gentlemen. I don't mean to imply that. All of us have been impressed by the high-powered and top-dollar legal defense that Clifford and Altman have assembled. They have retained the services of Skadden Arps and have enlisted the aid of a major PR firm, as has been said here. And when they testified before this committee, they were accompanied by no less than 10 lawyers. Is it true that First American is paying for these legal expenses, as reported in the paper? And if so, how much has been billed so far, if you know? If you don't know, I would like to have it supplied for the record. But is First American being billed for these legal expenses?
Well, Mr. Chairman, there are some provisions of law. There are also some provisions of the bylaws of the corporation which touch upon this subject. Generally, I think in our society, we feel that people are entitled to counsel. In this particular case, these bills have not been paid to date. There have been billings that have been submitted, and if the committee would like, we would be happy to supply that for the record.
I think.
But I can say that
it's germane to the hearing here this morning, Mr. Chairman, and I would ask that that be supplied for the record.
Without objections?
I think the directors feel that they will do what they are legally bound to do, but those decisions have yet to be made.
Those decisions were made before you became a member of the board by agreement previously, agreements previously entered into. Is that what?
Well, the provisions of the bylaws were before I.
Well, all right. If you'd supply that, I'd appreciate it. I noticed the red light just went on. We'll have some more time to get back to Mr. Chairman. There are a couple other areas I want to pursue. Thank you very much.
Mighty fine. Oh, I believe,
Riggs was here. That's right.
Mr. Riggs.
Thank you, Mr. Chairman. Gentleman, Senator Mathias, I want to go back to a comment you made about this separate loan committee that was set up under one of the holding companies, I guess as an adjunct to, looking for your organizational chart here. This is a loan committee of, was it the First American Corporation Bank Holding Company?
The loan review.
I'm sorry, go ahead, Senator.
Yes, the loan review process.
Where would that fall within your organizational structure here?
In bank shares.
First American Bank Shares of Virginia?
Yes. No. There's a slight confusion in this chart in that First American Bank Shares is noted as a Virginia corporation, but it shouldn't be confused with First American Bank of Virginia, which is the operating bank in Virginia.
Yes.
Which is also a Virginia corporation.
So your testimony is that First American Bank Shares, Inc. of Virginia, a bank holding company, had a loan committee or loan oversight committee?
That's correct.
Did any of you gentlemen serve on that committee?
No, the function that was referred to was a loan review function. Many of the personnel actually are physically located in the banks, and their job is to review loan files and see that the loans are properly graded, and that's important because it is those grades that determine appropriate loss reserves, charge-offs, and so forth. So that function was managed by personnel that were at First American Bank Shares. The actual loan reviewers were very often located in the various banks but reported to that individual. So there wasn't he didn't refer to a committee, he referred to an individual that performed a specific function. That function was loan review.
Okay, and who was that individual?
His name was Ron Libio, who headed that function.
Okay. Now, were any of you as individual directors and outside directors aware of the extensive loan activity, particularly in the area of letters of credit between First American Bank of Washington, D.C., National Bank, and BCCI?
You restate that, sir?
Well, do any of you have personal knowledge regarding letters of credit exchanged between First American Bank of, I'll say First American Bank of Virginia, or First American Bank here in Washington, D.C., and BCCI?
I am not.
Well, I don't believe there were extensive letters of credit. There were some letters of credit, but in the scheme of things and the volume of loans and letters of credit we have, I don't think there are any unusual number of letters of credit.
I don't believe we're aware of any substantial volume with those banks you just mentioned.
All right, and this would be, but there are letters of credit, those type of transactions, despite all the warning signs about BCCI, not the least of which, of course, would be the indictment and the fine in the Miami drug money laundering case, after which you continue to have a correspondent banking relationship of some sort with BCCI?
I don't believe there were any letters of credit after those dates in the local area banks. Our New York bank, which did substantial international trade letters of credit, continued to have a correspondent counterparty relationship with BCCI. And these were trade transactions done under correspondent relationships with BCCI.
Okay, well, I'm now looking at a memorandum, an internal memorandum dated December 21st, 1988. I guess this would be shortly after the indictments in the Miami case, where First American Bank, I guess this would be First American Bank of Virginia, through a William G. Vonberg, extended a letter of credit. This was to secure a performance bond, or actually an improvement bond, for a company by the name of Invest Trade, owned by one Muhammad Hamoud. Were you aware of that transaction?
Not at the time, but subsequently. It was a letter of credit issued by BCCI for one of their customers that was confirmed by our New York bank.
Which New York bank?
First American of New York.
Thank you.
And then our Virginia bank confirmed New York's, because the city of Alexandria required a Virginia bank to do so.
Okay, wasn't it rather unusual, or at least untypical at that time, that American banks were honoring BCCI issued letters of credit?
I don't believe it was unusual. There were banks that had different policies. But
are you aware of any other institution other than First American Bank?
Yeah,
that
absolutely. Absolutely.
Can you give me one? A non-BCCI affiliated or controlled bank?
If it's all right with you, I'll write their names down here and
that'd be fine. That'd be fine. Senator Mathias, referring to this specific transaction, did you know at the time, or do you know today, who Muhammad Hamoud is?
I do not.
Excuse me, sir?
I do not.
You're not aware then that at the time that First American Bank of Virginia issued this standby letter of credit to him and his company, that he owned more than 5% of CCAH?
I did not know that, no.
I can't hear you, Senator. I'm sorry.
No, I did not know that.
Okay. Are you aware that of existing banking regulations that require the disclosure of someone who owns more than 5% stock in a bank holding company? Mr. Adams is nodding his head yes.
That's correct. No, that's correct.
Can you explain then why you did not know who this gentleman is? I might help your memory out and just also point out that Mr. Hamoud is also the gentleman who bought the stock from Mr. Clifford and Mr. Altman.
You know, I might say, sir, that I had no reason to know who he was. I assume that he was properly registered with the Federal Reserve, but nothing had brought his name to my attention.
And you were not aware then that, for example, that he had acquired this interest by purchasing the stock of Mr. Clifford and Mr. Altman?
I certainly was not. I had never heard of that transaction.
Did any of you as directors in your oversight fiduciary capacities specifically focus in on the compensation package for Mr. Clifford and Mr. Altman? Compensation that they receive?
Yes, from
for their duties with the bank?
time to time, Mr. Clifford would remind us that his salary was $50,000 a year.
Yeah. Well, I'd love to pursue this line of questioning further, but I notice the red light is on, so I'll stay in the hopes that I perhaps can obtain some time later. Thank you, Mr. Chairman.
All right. We'll proceed, Mr. LaRocco.
Thank you, Mr. Chairman, and I want to thank the panel for being here today and Senator Mathias. A critical question that I raised at the earlier hearing with Mr. Clifford and Mr. Altman was on this question of when an investor is really a nominee, when there's a front person, and maybe that follows on a little bit what my colleague was asking. Who could have or should have known that the investors were really nominees for BCCI within the bank?
Who could have or should have known that the investors were nominees? Yes. Only those people who had access to the basic information.
I mean, Mr. Clifford was saying that he was duped, he didn't know. Who could have? Who really has responsibility within First American?
Of course, we're looking at a very tangled situation here, and one that isn't perfectly clear today. Mm-hmm. The Federal Reserve believes that perhaps 25% of the shares were owned by nominees. We're advised by the liquidators in that the original shares are not in their possession. There are those people who have been said to be nominees who say they never borrowed any money, never signed any notes, never signed any stock powers. So this is a very tangled kind of factual situation.
Can you suggest to the committee what should be done to either legislate or to enact into law means for which we can get our hands on that information in the future? In other words, how do we, what I'm getting at, Senator, is how do we prevent this from happening in the future, and what means can we transfer information around the world that would be meaningful to us here in this country? I agree with you that we should not stop foreign investors from purchasing, from transacting business in this country. It's just that when they try and do it without our knowledge, without your knowledge.
I think you've touched on a very important subject for the future, because if we're going to have free flow of capital around the world, free flow of trade around the world, then there has to be some kind of commensurate responsibility and means of enforcing regulations. I would hope the committee would look into international regulatory authorities that could follow these transactions from one country to another, so that you wouldn't have to stop at the border of the United States, you wouldn't have to stop at the border of any other country, but you could have competent international supervision. And it seems to me that that's going to be a necessary concomitant to this global economy which we've seen developing in our generation.
Do you have any specifics on that, Senator, that would help us further? I appreciate that comment very much.
Well, I would think that what's happening in Europe offers at least an opportunity to get started as the European community develops. It gets into high gear next year in 1992. It'll be possible to have a greatly expanded relationship with the European community, which will touch all the member nations of the community. So that will in itself advance the international control of transactions of this sort. And that pattern then needs to be expanded into other areas geographically.
I appreciate that. I was looking at a memo here that was provided to the committee dated 10/8/87 from Mr. Montano. It suggests, well, there was an international coordinating committee within the bank, which I think somebody had mentioned that this was normal for banks to be pursuing business with embassies and so forth. In retrospect, was that committee so aggressive that it led to ties with various parties that led to this ownership, or in retrospect? It seems like a very aggressive committee.
I don't think that had anything to do with the ownership, whatever.
Mr. Barrett, who did he work for within the bank?
Well, now, which committee?
He's talking about the International Coordinating Committee. It seems like it's a committee within the bank that pursues the marketing of services with the international community.
Could you identify that?
Yeah, I'm not familiar with the document you're talking about or the committee you're talking about. So if you could provide us more information, we'll be glad to give you a full answer.
The International Coordinating Committee of your bank, sir.
Is it
President were Mr. Ellie, Montana, Congolosi, Barrett, Lord, Shahish, McDonald, Von Berg, McKenzie, Cater, Valdez. Minutes of the International Coordinating Committee meeting, September 29th. It looks like it's associated with your bank. I was just trying to pursue a question. This is not a hostile question, by the way. This is a friendly question because somebody made the statement that that you were pursuing, like every other bank in Washington, D.C., international business. But within this memo, there's a mention of BCCI and others. And, I'm just wondering, in retrospect, if you looked over the last 4 years, whether anything that was overly aggressive in this committee sort of led to these entanglements.
Well, I don't think we have any entanglements with BCC that are a problem for us at the First American Bank shares and below level. Any entanglements are at the CCAH level and the stockholders. So this committee was a group within the company to discuss what sort of international business might be available for them. But I don't think it led to any improper or overly aggressive connections with BCC.
How will you know in the future when a person shows up with money and asks to buy stock, whether that person is a nominee or whether he's a bona fide investor at your bank after all this has happened?
Well, that would be a matter at CCAH. CCAH has a list of shareholders. If it were going to issue new stock, it would have to find out who it was dealing with. Ordinarily, I think CCAH, because of preemptive rights, when they have issued new stock, have simply offered stock rights to subscription rights to their existing shareholder base. We weren't involved in that. CCAH handled that, and they did have a number of stock issues over the years, but I think they were all back to their regular shareholders, and if a regular shareholder wanted to assign his rights to somebody else, he could do it.
Thank you. I see my time's expired, and I appreciate your answers, and obviously...
If there is no objection, I'm going to ask the gentleman be given an additional minute, because I'm sitting here and I'm astounded. Incredible. And in fact, kind of scared now. If you guys are in charge of the bank, and he's reading from a memorandum of the minutes of the International Coordinating Committee meeting, September the 29th, 1987, I think the two operating officers were on board then. Were you not, Mr. Adams, Mr. Scafoni, weren't you all on board then? And present, he read from the First American Bank of New York, Mr. Ellie, who's also a BCCI employee, also from New York, Mr. Montano, Mr. Cangelosi, Mr. Barrett, and from, you have from NBG, Mr. Cater, Mr. Valdez, NBG International, and then luncheon guests. It even has luncheon guests. Mr. Stevens, First American Bank International, that's Florida, and Mr. Duncan from New York. You mean y'all weren't aware of this committee? These are employees.
No, we are familiar with that committee. There were other committees and other testimony that came up, and it was just unclear what you were referring to. And that committee was an attempt that was really initiated by Mr. Altman to utilize the capabilities that had been developed in our New York bank in other areas of the banking system. And those capabilities really had to do with being able to offer trade letters of credit to small and medium-sized companies, and also access to CHIPS and SWIFT money transferring services, a capability that these other banks did not enjoy, which New York had. So an effort was made to get the appropriate officers together to see if there was more that could be done, primarily with the capabilities that existed in our New York bank. So that was the purpose of the committee, and they attempted to develop plans to expand this business.
The first reaction here, and I noticed nobody volunteered otherwise, was that it was unknown of. So thank you very much for having, I think the time's up again. Mr. Army.
Thank you, Mr. Chairman. Mr. Scafoni, I'm going to ask staff to give you a couple of memos that I want to ask you about. In May of 1986, your bank was considering the acquisition of the First National Bank of Georgia, which was owned at that time by Mr. Ferrone. And would somebody from staff please give these memos to Mr. Scafoni? I have a memo dated May 8th. I'm trying to drive at this question of the extent to which people in BCCI were conducting the affairs or encouraging or abetting or running the affairs of First American Bank. I have a memo from Robert Altman to a Mr., if I hope I pronounced the name right, Swali Nagvi. Do you know Swali Nagvi? You have any idea who this person is?
I've never met the individual, no.
Do you know who he is?
Yes, I do know who he is.
He's apparently with Bank of Credit and Commerce International. That's the address on the letter. And Mr. Altman explains to Mr. Do I pronounce Mr. Nagvi's name correctly? Nagvi?
I believe it's Nakvi.
Nakvi, thank you. To Mr. Nakvi that in discussions with Dr. Ferrone, it would be advantageous to Dr. Ferrone that the purchase be made by your bank rather than NCNB. Another point he makes is that you have made an analysis of the proposition and that it is attached, and he makes certain recommendations, and then at the end of the letter, the very last, it says, if you have any questions, please call me. I trust you will forward this information to Mr. Abadi. Who is Mr. Abadi?
Mr. Abadi was the president of, or the founder of Bank of Credit and Commerce International, to my understanding. I've never met the individual.
So he, obviously then Mr. Altman is looking into the proposition of acquiring first, or the Georgia Bank at the behest of Mr. Nakvi and Mr. Abdi. I mean, could one draw any other conclusion regarding this?
This is the first time I've seen Mr. Altman's letter to Mr. Nakvi. The only thing I can say is that BCCI was the financial advisors to the investors, and it appears to me that he was just transmitting my analysis of the acquisition.
Well, let's go on with your analysis. You have also a copy of your analysis. I'm sure you've seen this before. First of all, this doesn't strike me as a very smart acquisition, since there are obviously legal obstacles and legal hurdles to be overcome if the bank is to acquire the Georgia Bank, and there are, certainly would have been other alternative acquisitions if they're the case. But one of the things that strikes me here is you recommend in your memo that the bank pay $211 million for National Bank of Georgia, and that that would be considerably higher than the median price of other offers, which was around $152 million. NCNB had offered some amount considerably less than that, and it was not very attractive to Mr. Ferrone because they wanted to do what's called a stock swap. And he apparently needed cash rather desperately. Then you go on and say, we could offer $211 million, a price considerably higher than what anybody else was willing to offer. And then you examine alternative ways in which the transaction might be structured. And on the second page of your memo, you say, I do not believe that setting up a shell bank holding company is the appropriate way to proceed. That would seem, I would think, somewhat obvious to just about anybody that one would not want to. Was it a fairly common practice with banks with which your bank was affiliated to use shell bank holding companies?
Yes, that's correct, it was.
And this is a common practice in banking?
It was a common practice with Financial General, and it was the way we were structured when I joined the company back in 1966.
Okay. You then say that you could come up with $160 million in cash, and then perhaps use some CCAH stock. I see that mentioned here. And then you say $60 million from a third-party lender known to the investors, such as BCCI or BAII. So you're working out a worksheet where you're giving Mr. Ferrone at a very attractive price, primarily financed with cash, that in turn acquired through loans from BCCI, sending this memo to Mr. Altman, who sends the memo back to an officer at BCCI and specifically requests or expresses his trust that Mr. Abity would get this information. Doesn't that look to you like a clear indication that BCCI is directing the decision of your bank to buy the Georgia National Bank under very favorable conditions to Mr. Ferrone? Did, in fact, Mr. Altman tell you that we are interested in pursuing this particular transaction, irrespective of all other things we might pursue, irrespective of the legal obstacles in pursuing this transaction, in order to bail out Mr. Ferrone from his current financial troubles and to cover the investments of BCCI? Did Mr. Altman tell you, give you this instruction when he asked you to work up this?
He did not.
Did Mr. Altman tell you that Mr. Abeti was particularly interested in this transaction and that they wanted to proceed? You get your memo to him on the 7th. He has it in the hands of BCCI on the 8th.
He did not.
You had no knowledge of the relationship between BCCI and Mr. Ferrone?
Now or at that time?
At that time.
I did not know of Mr. Ferrone's involvement to the extent he was with BCCI.
Would the gentleman yield?
I'd be happy to yield.
On phase 2 of this National Bank of Georgia acquisition alternative, which you prepared, it says, 1, best effort is made to persuade Federal Reserve or change Georgia law to allow CCAH to acquire NBG. Estimated time to succeed 1 year. Now, that's rather specific information to suggest that you didn't know that BCCI was interested in the National Bank of Georgia. Well, where does that 1 year...
I don't understand the question. It says
where does the 1 year come from? What's the significance of the 1 year?
That was just my estimate of the time that it would take to change Georgia law to allow First American Bank shares to acquire the National Bank of Georgia which I spelled out a little earlier in my memo, that under the Southeast Compact, we couldn't acquire this particular investment the way the compact was structured. And it was my understanding that one of the ways to change it was to get the Georgia law changed. And I just estimated that it would take about a year to do that.
Would take about a year to change the Georgia law in order to accommodate this acquisition.
Yes, that's correct.
During which time that would allow for a considerable amount of lobbying activity, I would assume, of the state legislature. Is that a fair statement?
I'm not a lawyer and I'm not a lobbyist, so I can't really speak to that. That was an outside limit of my part to give him some idea of how long this transaction could take.
What was that based on? That's what I'm trying to find.
Just based upon my judgment of how long things generally take.
If I might reclaim my time, Mr. Scafoni, did you tell Mr. Altman that this was not a good transaction for this bank to undertake?
I did not.
Did you tell Mr. Altman that it was not a good idea to park several $1 million in CDs in the bank in the Cayman Island owned by BCCI that was in trouble, both with respect to the stability of the bank and with respect to its legal problems?
I'm not sure I understand the question.
You know the transaction where your bank purchased several $1 million worth of CDs from a bank in the Cayman Islands. You remember that? The Cayman Island CDs? $74 million in CDs.
Are you referring? Excuse me, I'm sorry.
Would you consider that a prudent thing for your bank to buy $74 million of CDs in the Cayman Islands Bank?
Well, first of all, I believe First American Bankshares did take out a $45 million CD with the BCCI in the Caymans in 1986. And it seems to me at that time, I'm not aware of any problems involved with BCCI. And no, I did not tell Mr. Altman that it was a bad investment.
Can I take it that you found Mr. Altman, a man who had previously had no experience in banking, to be so astute as a banker that he did not require advice from you when he entered transactions that would be, I think, patently risky to anybody, whether they're in the banking industry or not? Was he that astute a person?
Well, I believe the way the transaction happened, First American Bankshares received $45 million from cash capital from our investors, and Mr. Altman instructed me to deposit that money with BCCI Cayman, since First American Bankshares at that time had no need of the funds.
How much money did you say?
$45 million.
What about the $74 million? Then there were certainly more CDs than the $45 million.
The $45 million was at the Bankshares level, and the $29 million was at the CCH level, which I was not familiar or involved in that transaction. The reason we did the investment was to receive a higher rate of interest than we would normally receive in the domestic banking situation.
In your opinion as a banker, was the rate of interest high enough to compensate for the risk, since this bank was obviously in trouble and that you had no fiduciary or no insurance against that risk?
It wouldn't have made any difference where we deposited the money. The money would only have been insured up to $100,000, so $44,900,000 would have been a risk regardless. Yes, we received approximately 100 basis points higher rate of return. At the time, BCCI was not in trouble, to my knowledge. I didn't see any problem with the transaction. Mr. Altman requested that I do that, and I followed my instructions.
Thank you, Mr. Chairman. I'll be back.
Okay, sir. Mr. Moran.
Thank you, Mr. Chairman. I'm going to follow up on Mr. Army's line of questioning, and then perhaps Mr. Slattery will as well. I started out this hearing with a statement that to make it clear that the banks in Virginia, Maryland, and D.C. are not involved in any illegal activity, and that appears to be the case, those banks under First Metro Holdings. But when you look through this material that the staff has acquired through subpoena, you can't help but be shocked at the information here. And let's talk first of all about National Bank of Georgia. I think, as most of us are aware of the beginning of the story, Bert Lance was in some financial trouble, and it was Mr. Abidi who came to him and arranged for a purchase of NBG stock from Mr. Lance by Mr. Gaith Ferrone for twice what it was worth on the market at that time. Ferrone paid about $20 a share when it was worth about 10. Is that roughly your...
I have no knowledge of that transaction.
You don't have knowledge of a lot of specific things, but there are things that seem to get you involved, whether it's only as a numbers cruncher, Mr. Scafoni, or perhaps deeper. But anyways, then we have a recommendation here from as to the purchase of National Bank of Georgia for either $160 million in stock, plus another $60 million that would come from a third-party lender known to the investors, such as BCCI or BAII. And now we're talking about $211 million at a time when this bank had a negative cash flow of $100,000 in 1986. That's correct, is it not?
I'm sorry, which bank?
Well, National Bank of Georgia. I'm looking at the numbers that I suspect you may have supplied. It begins with 1986 figures that there was a net cash flow of minus $100,000 with National Bank of Georgia. At the time, it's being recommended that it be purchased for $211 million. I understand that it was eventually purchased for $220 million, which there's just, this boggles the mind why this much money is being transacted for a bank that it certainly wasn't worth more than the $10 a share it was trading for when Mr. Ferrone paid twice that amount, and here we are inflating it again. But what bothers me more than that is this statement about that best efforts is made to persuade Federal Reserve or change Georgia law to acquire CCAH, to allow CCAH to acquire NBG. How much was spent on that lobbying effort to change Georgia law? In other words, to influence the Georgia legislature?
To my knowledge, First American did not spend any money. I don't know what the National Bank of Georgia spent to, I don't have that information.
Mr. Chairman, does the staff have information with regard to how much was allegedly spent to influence the Georgia legislature during that one-year period of time?
Let me say prefatory, the Federal Reserve Board is conducting an investigation from the standpoint of violations of the law in the efforts made to change the law in Georgia. However, the best estimate we've had from the documents the staff has researched is about $1.5 million.
$1.5 million in 1 year to change Georgia law. That's an awful lot of receptions. Does anybody on this board who, my problem is that while First American Bank Shares is responsible for First Metro Holdings, which is my parochial concern, you also own for National Bank of Georgia and First American Bank in New York, and those seem to be the two banks that where there's some major problems. Now, does anybody on the board, Mr. Beto, let me ask you, are you familiar with any lobbying efforts or memos that you were aware of with regard to influencing the Georgia legislature? You may know there's an allegation that the word influencing was actually to buy the Georgia legislature. That's what, are you familiar with any efforts to finance that?
I was not familiar with any of those efforts at that time. That was before we acquired National Bank of Georgia. And whatever was done by somebody in Georgia or Gaith Ferrone. I've seen information since that time, but I didn't know anything about it at the time.
What information have you seen since that time, Mr. Beto?
Well, I don't recall right now, but I have seen somewhere in recent months some references to lobbying efforts that were carried on in Georgia before we acquired the bank, but we had no connection with that.
It's somebody is pulling a lot of shenanigans behind the scenes, perhaps. But these memos back and forth indicate that there was a very clear relationship between BCCI's financing and their intent on taking over these banks and using the vehicle of First American Bank shares and CCAH and CCAI. Mr. Scafoni, could you tell us whether you believe that BCC, in your knowledge to date, BCCI was deliberately attempting to acquire control of the banks directly controlled by First American Bank shares?
I have seen the Fed's allegations. I was never involved in anything with BCCI or was ever controlled or given directions from anybody from BCCI. To my knowledge, First American was not controlled by BCCI.
You know, there's a memo here, April 8th, 1985. Are any of you gentlemen familiar with a memo from Mr. Shawish, First American Bank of North America, to Mr. Altman, president of First American Bank Shares, in 1985? You're not. Nobody here is familiar with that.
Well, I don't recall it offhand.
Well, it says that upon your suggestion, I visited Bank of Credit and Commerce International in Miami. The purpose of this visit was to exchange ideas and find ways in which First American and BCCI can work more closely together in areas that can be beneficial to both. They go through a number of areas in which they would be closely tied. And then it says on page 2, BCCI expressed their interest in referring business to us, and thus we reciprocate. If an American company or contractor doing business in foreign countries is in need to borrow or post a bond, we can lend in the U.S. and have BCCI issue the guarantee through their office in the foreign country. 2, they can provide us with country study and economic and political analysis services of foreign countries. 3rd, First American Bank of New York is currently opening correspondent relationships and exchanging test keys with many banks throughout the world. Since we are just starting, we do not know the volume of business we're going to have with this. And if First American Bank of New York opens accounts and exchange test keys with the regional offices of BCCI, we will be able to service most of the world through probably 3 accounts: Miami, London, and Hong Kong. And obviously, it would be less expensive to the bank. As we expand our international business, we can selectively open new accounts with other banks. And then it talks about the Commodity Credit Corporation. Mr. Chairman, you remember this Commodity Credit Corporation. This was how B&L got into this. They were using Commodity Credit Corporation, and this memo explains exactly what B&L did to obtain subsidized loans, really with the help of the American taxpayer, to be able to let's see, the OCC guarantees 98% of the principal and 88% of the interest for a maximum period of 36 months. Clearly, BCCI had in mind using First American to pursue much of the same kind of activity we're finding with B&L, and then when you list the number of foreign transactions, particularly in arms sales, you find that this is almost at least on the surface, it may be a parallel situation. And there's a who prepared this acquisition alternative, Mr. Scafoni? All the numbers here, you've got projections as to the purchase of National Bank of Georgia, the analysis of their fair value.
That's my work.
That's all your work.
Yes, it is.
And that's the work that was attached to the letter from Mr. Altman to Mr. Nakvi of BCCI in May of 1986 that Mr. Army was referring to, that involves the purchase of National Bank of Georgia, and of course relates the ways in which it might be done. Now, your memo to Mr. Altman on May 7th of '86, it is your words, right, that $160 million would come from two sources, $100 million from investors' own capital and $60 million from a third-party lender known to investors such as BCCI.
That's correct.
That you wrote that memo.
That's correct.
Now, what happened after you wrote that memo? Was that advice followed?
No, it was not.
Was not.
The transaction, as it finally was consummated, the shareholders contributed $190 million in August of '87, and we acquired the National Bank of Georgia for $227 million.
$227 million for a bank that had 100,000 negative cash flow.
I'm not quite sure where you're reading from.
Well, it's the chart that is attached to your memo. I was just looking through the numbers. I used to be an accountant.
Right. Well, that is the cash flow resulting from our investment in the National Bank of Georgia. We would receive dividends, some tax benefits, and if we had to service any debt, we would have a negative cash flow of $100,000. That's correct. But the Georgia Bank was earning money, millions of dollars worth of earnings in that period of time. This memo is a series. There is a second memo dated October 1985, which talks in more depth about the National Bank of Georgia and why we should acquire the National Bank of Georgia. This is it's not a single memo.
Not a single memo. Why did you recommend that BCCI might come up with an additional $60 million in cash? What gave rise to that recommendation?
The way the deal was to be structured, we were to get capital of $100 million, and then some entity, possibly our shareholders, would borrow $60 million to finance the acquisition of the National Bank of Georgia. And I simply recommended that since the shareholders were known to BCCI, it was their financial advisor, and that we've had some relationship with a bank in Paris called BAII, that it seemed normal for me to go ahead and make that recommendation.
That BCCI, essentially BCCI would be acquiring control of National Bank of Georgia if that recommendation was followed.
No, I believe you're incorrect about that. My memo says that the money would be lent to the investors who would be buying the bank.
Well, yeah, but if you're lending the money, was the bank going to be used as collateral for the purchase?
I didn't say that the bank would be used as collateral, no. It would be an unsecured loan.
An unsecured loan of $60 million just to acquire control. I mean, just to enable others to acquire control of National Bank of Georgia.
I don't want to debate that issue with you, sir, but you keep saying that I'm saying that BCCI would acquire control, and I'm not saying that at all. I think you should read my memo.
Well, I've looked through the memo, and I'm trying to also read between the lines to understand what went on, because you were the treasurer, and you're the numbers cruncher, you do the analysis, you make the recommendations. And the problem that comes out of these memos is there's something missing. The prices paid for things are not worth what they get on their surface. So there must be some other rationale, some other motivation. Theron's purchase of National Bank of Georgia for twice what anyone else was willing to purchase it for, that doesn't make sense. And the reason we ask is because First American Bank shares, you gentlemen are responsible for the management of First American Bank shares, and there's something missing, and that, of course, is what these hearings are all about. Why BCCI is so actively involved in purchase, and how they took advantage of the fact that they were responsible for enabling purchasers of National Bank of Georgia, for example, to ostensibly own it. And if you are making these recommendations, I can't understand why you're suggesting that you pay $220 million. You'd say it was actually purchased for more than that, when the numbers don't seem to justify it. And yet you are the financial analyst. They're going on your recommendation.
Well, if you will refer back to my October 1985 memo, in that memo it discusses that the average price paid for banks in the Georgia region was 2.24 times book, and that is why I recommended that we pay 2.25 times book.
But it was dependent really upon Georgia law being changed, and you were assuming it would be changed in a year, and so you're banking on a value attached to the bank that assumes that you're going to be able to change the law. Now, I guess if you put $1.5 million into changing the minds of legislators, if you knew there was a commitment to do so, maybe you can make that assumption. But normally, you wouldn't assume that law is going to be changed that quickly for the benefit of the purchaser and build in the higher price based upon the assumption that the Georgia law was changed. Can you understand my perplexity? Can you grant us that?
I do not.
You can't, of course not. Well, I use my time, Mr. Chairman. Perhaps Mr. Slattery will follow up on this.
Well, we have Mr. Roth waiting here very anxiously, and we don't want to hold him up because it's his turn is due. I was just turning over in my mind why Ferrone would give that. Maybe he was trying to restore the Georgia peach industry. You think?
Was the guy that Mr. Abidi came up with after meeting with Mr. Lance and understanding that Mr. Lance had some trouble. Ferrone was a convenient middleman, apparently.
Well, we're going to invite them. Well, Mr. Ferrone is probably laughing up his sleeve all the way to the Middle East central banks. He got all his money out on loans up here. He didn't lose anything. And he's aboard a yacht off Argentina waters, enjoying life generally. So, but we're still going to invite him if we can locate him. But we are going to invite Mr. Lance and a few others. We have a long way to go. We have a long way to go. Mr. Roth.
Thank you, Mr. Chairman. I appreciate you calling on me this morning. Mr. Chairman, I just have three short questions of our distinguished panel here. I would like to follow up on one question, however, to Ms. Moran's question to Mr. Scafoni. First American purchased the National Bank of Georgia for $220 million. I think Ms. Moran said it was more than that, but $220 million, that's what my information is here. The Federal Reserve investigators indicated that First American made this commitment without any, now let's start with, without any due diligence on the Georgia Bank. Isn't this unusual to make a $220 million investment without due diligence? Yeah, I'm just curious, do you feel that you fulfilled your fiduciary duties?
There was due diligence performed on the bank during the 1987 timeframe before we acquired the bank.
What time?
Can I comment on that?
What kind? Yes.
Yes, Mr. Roth.
The reason I'm interested is because the Federal Reserve investigators, who we rely very heavily on, said that there wasn't any due diligence exercised here.
CCAH entered into an option agreement with Gates Ferrone to buy that bank. That was not a decision made at First American Bank shares. CCAH entered into an option agreement, paid $80 million for the option, and had the right at a later date to exercise the option on which the $80 million would be credited on the purchase price, or deny the option, not honor it, and the $80 million would be refunded to them. I don't believe any due diligence was done prior to that options having been entered into. But while the option was in effect, the company did do a great deal of due diligence. The then president of the bank, of First American Bank Shares, was sent down to Georgia and spent a great deal of time down there personally. He brought all sorts of teams down from the company to look at the Georgia bank.
To look at these credit files, you mean?
To auditors to look at everything they were doing, the credit files, data processing people, all sorts of people down to inspect the bank. And those things were done before the option was eventually exercised.
No, our records don't reflect that, so maybe if you could give us some information on that would be very helpful too.
We could supply some records on that, yes, sir.
Thank you, Mr. Bedell. All five of you are very sophisticated and very knowledgeable people, and I'm sure it'd be hard to pull over the wool over your eyes. And I'm just curious, when and how did you first find out that First American was owned by BCCI? I mean, your secretary come in and say, "Hey, I read something in the paper," or...
Well, let me go back. I'm afraid it'll be repetitious of some things that I've already said. First American Bank Shares is owned by First American Corporation, 100%, which in turn is owned by CCAI, which is in turn owned by CCAH. Now, the question is, who owns CCAH? We know that 28% of CCAH is owned by Abu Dhabi interests. I think that seems to be undisputed. Beyond that, there are a list of registered stockholders, some of whom are alleged to have made loans from BCCI, subsequently defaulted on those loans, or perhaps the loans were fictitious in the first place. That's a possibility. But that is not generally admitted to be a fact. In fact, it is in dispute under some circumstances. And all of this, of course, came to light in the relatively recent past.
But, Senator, to be more specific, we know now that First American is owned by BCCI. You didn't know this when you first became to the board.
You know now that BCCI is claimed to have had a stock interest in CCAH. That's what we know. We don't know how much it is. Federal Reserve believes that it's more than 25% of the CCAH stock. But until all of these factual questions are resolved, it's pretty hard to say what BCCI owns, whether they own 25% or more or less. That's a very, I appreciate the fact that you ask this question, because it's really central to understanding what the difficulty is here. Somebody someday is going to have to determine this, but it's going to require facts and figures and information that has not been made available. As I testified earlier, the liquidators, the people put in charge of BCCI by the courts in London and in Luxembourg, have never seen the shares of CCAH stock. At least that's what they tell us. So where are those shares? Who does have them? Who does in fact own them? Those are legal questions that are yet to be resolved. And if you want to know who owns First American, it's First American Corporation and then on up the chain of holding company. But when you get to the end of that chain, you're really jumping off into a very murky situation.
Well, Senator Mathias, I've respected you, as you know, for a long time. I've worked with you when you were over in the Senate. And I really didn't get my question answered. It's just like there's a big fog here, big smoke, saying, hey, we don't know where the facts are because there's so much smoke around us.
That is the situation. we have endeavored to find out exactly what it is.
On that point, would the gentleman yield?
Well, I'll yield, yes.
Yeah, that's the point I was attempting to make a little earlier in a little different way. We get up here at the top, Credit and Commerce American Holdings and Netherlands Antilles, and then everything goes off into space. There's a big fog there, and I have a feeling that the other box at the top ought to be BCCI. And I think that's the point the gentleman's making.
And that's the way it may turn out. I can't guarantee you one way or another. You ask us for a question of what do we know. We know that these allegations have been made. We know that...
But Senator, I mean, really, you know, when we're talking about buying the bank in Georgia and so on, Mr. Cafone, there's millions of dollars changing hands. We're going to BCCI. BCCI is looking at resumes and so on. Didn't you fellas at one time, I mean, you are very sophisticated people. Didn't you at one time turn over to Mr. Bedeau and say, hey, there's got to be something going on here. We got to check into this?
Well, since you asked me, I can tell you that this happened before I became a member of the board. So both the Georgia acquisition and the New York acquisition. So I had no personal knowledge of how those acquisitions occurred or for what reasons they occurred.
Well, maybe I should, I appreciate that. Maybe I should ask Mr. Bedeau, didn't you ever at one time turn to these other members and say, hey, there's got to be something wrong here? I mean, business just isn't run this way.
If you're speaking of the National Bank of Georgia purchase, Mr. Roth.
I mean, if that would be the only one, I'd say, well, maybe, but there's so many of these other things.
Well, let me speak to that acquisition. That acquisition was negotiated at a higher level than bank shares. CCAH entered into the option agreement to buy it, and the $80 million for the option agreement was paid at that level. That was not a bank shares decision. CCAH then gave that option with the $80 million prepaid to bank shares. The stockholders, we were led to believe that the stockholders wanted to acquire that bank for strategic reasons. They gave bank shares all of the money it took to acquire it, and so we acquired it.
I would just make this observation, Mr. Chairman. It seems to me from what the board is telling me, if I understand this correctly, is that they're telling us they're the board of this bank, but they don't know who owns this bank. If you say BCCI, and I don't know, I'm not clear on what the answer is.
Well, I think the gentleman, seriously speaking, I think the gentleman has every reason to be asking the questions and feel quite dissatisfied, still unresponsive. You know, I grew up, and one of my pals and friends was the grandson of a family that had come from Georgia, and we called him Grandpa Hetty, and he had a saying. He said, well, if you want to avoid suspicion, don't stoop in the middle of the watermelon patch to tie your shoestrings. So, you know, you can't avoid suspicion, gentlemen, but, you know, these are the reasons for the questions. And I don't think the intent is to try to impeach judgment, but to have us gain the necessary grasp of knowledge and information as to how operations have come about based on a system of a board of directors of financial institutions. And we get the contradictory answers. We have the documentation showing clearly some of the transactions. But anyway, I shouldn't interrupt because we ought to continue, and I recognize Mr. Slattery.
Thank you, Mr. Chairman. Mr. Scafone, in the 1986 memo that has been referred to earlier by the gentleman from Texas and also the gentleman from Virginia, you indicated, and I quote, that in summary, this transaction would be highly beneficial to the present owner of NBG, Mr. Ferrone. The bank would be sold at a significant premium over both national and local median prices. That is a quote in your memo. Is that correct?
That's correct.
Were you aware that Mr. Ferrone was in serious financial trouble at the time of the First American purchase of NBG?
I seem to recall reading in the press that, yes, he was in financial trouble.
So you were aware?
Yes.
Were you aware that Mr. Ferrone was one of the largest shareholders of BCCI at the time of the sale of NBG to First American?
No, I was not.
You were not aware of that? I find it really hard to understand why First American was so anxious to give Mr. Ferrone such a good deal on the sale of NBG. Was First American forced to purchase NBG by BCCI?
No, not to my knowledge.
Do you have any knowledge of any attempt by Mr. Abadi to encourage either Mr. Clifford or Mr. Altman to acquire NBG?
I have no knowledge of that, no.
Did you hear of anything like that? Did Mr. Altman ever tell you that Mr. Abadi was interested in the National Bank of Georgia?
I don't recall Mr. Altman and Mr. Clifford would travel to London to meet with the shareholders' representatives, and from time to time they would advise us of that, and I don't recall exactly if that ever came up in the conversation.
You, Mr. Scaffoni, though, were doing the numbers here, and I find it interesting that you would be so concerned about the seller when you were really working for the buyer. Can you shed some more light on that?
Yes, at the time it was my understanding that Gaith Ferrone was getting two bids on the bank, one from us and one from the one from NCNB. I don't have any confirmation of that, but that's what I was informed of. And so what I tried to do was structure a deal that would Mr. Ferrone would accept over the NCNB transaction. We were very interested in getting into the Atlanta market. It's a market similar to the Washington market. It's the financial center of the Southeast. And so we were very interested in getting into that. And as a side note, we did own the National Bank of Georgia prior, and it was a part of the First American family way back when, prior to 1975.
In trying to make sense out of all this, when we realized that Mr. Ferrone, who owned the National Bank of Georgia, was also a key shareholder in BCCI, who we now know shareholders of BCCI were also the same shareholders, or at least some of them, with the Credit and Commerce American Holding operation. So if Mr. Ferrone owned the National Bank of Georgia, and he was getting a sweet deal on the sale to First American, which was owned by an entity which he also had an interest in, then all this makes sense. It's sort of like taking money out of one pocket and putting it in the other pocket. Isn't that a pretty accurate description of what happened?
Yes, in hindsight, but if you didn't have access to all the facts that you just related to at the time the transaction was consummated, I'd have to say no.
Mr. Scaffoni, is it your testimony today that you had no knowledge, none, of any attempt by BCCI to encourage First American or anyone employed by First American to acquire National Bank of Georgia? Is that your testimony today?
I'm not quite sure you used the words encouraged. If Mr. Altman and Mr. Clifford went to London and met with Mr. Abadi and Mr. Adham to discuss this transaction, yes, they may very well have been encouraged to do the transaction, but I'm just not aware of any conversations between Mr. Clifford and Mr. Altman and Mr. Abadi and any of the shareholders.
Well, did So you don't have any knowledge then, is that what you're telling me? I want to be very specific
correct.
here.
That's correct.
You don't have any knowledge of any attempt by BCCI to influence the acquisition of the National Bank of Georgia?
Again, I can only go back and say if there was any influence, it was between Mr. Clifford and Mr. Altman and BCCI and Mr. Abity. I'm just not privy to any of those conversations.
Well, did Mr. Altman come back and say to you that Mr. Abity is interested in these banks, or was there any indication that he was from Mr. Altman? I know you may not have been in the meetings in London, but did you have any knowledge of, or did you have any conversations with Mr. Clifford or Mr. Altman that would indicate that that they were being encouraged to acquire the National Bank of Georgia?
Yes, I was. I was informed that the investors were interested in acquiring the National Bank of Georgia.
And the investors were who?
Were the shareholders of CCAH.
Which were also the shareholders of BCCI, as we now know.
Yes, as we now know. Yes, that's correct. But one point I do want to make clear is that nobody...
One of the principal key players in all this, of course, is Mr. Abity, who is the president and the co-founder. He owns, controls, in effect, BCCI. And he also was the man that you knew Mr. Altman and Mr. Clifford were reporting to. Is that not correct?
Yes, Mr. Clifford and Mr. Altman would go to London to report to the...
owner of and the co-founder of BCCI.
As the financial advisor to our shareholders, that was the position that we were told he was in, relative to our shareholders. I would like to make one point clear, though, that up until early '91, I was not aware, and I don't believe any of these other gentlemen were aware of the exact names of the shareholders of CCAH.
Were there any other banks in the Atlanta area that were looked at by First American?
Not to my knowledge, no.
Don't you think it looks like that Mr. Ferrone could have been the connection here as we look back now? I mean,
Yes,
the fact that
yes,
he
it does look that way.
was involved in both ends of the transaction, in effect.
As it appears today, yes.
I have a question for the rest of you, and I'd start with Mr. Mathias and Mr. Bedeau also. Many of us would like to believe Mr. Clifford and Mr. Altman, but I come back to one central point, I suppose, and that is who hired Mr. Clifford? And the answer to that question, according to Mr. Clifford's testimony, was Mr. Abity, representing unknown shareholders, supposedly. And then the question is, who could fire Mr. Clifford? And we never really got a clear answer about that. But I'm just curious, you men were all members of the board of directors. Who could fire Mr. Clifford?
I insert something there.
Yes.
There's a significant chronology on what happened to Mr. Abity and what happened to people that he represented, all offshore people, incidentally. It became our understanding that they were no longer Clifford and Altman were no longer representing the lead investors in the Abity's undertakings. Another law firm had assumed that role. And this, I think, has to be part of your information.
Well, here's my concern. I mean, I've been on the board of directors of a bank myself, and
as have I.
And I am just confounded by this proposition that you folks, as members of the board of directors, one, apparently did not know who could fire your chairman of the board.
Well, it would
now,
depend.
You folks could not, apparently. Is that true? Mr. Bedeau, help me understand what was going on here.
Mr. Clifford was elected by the shareholders, and it would be my understanding that
and your testimony is you don't know who the shareholders were.
No, but they were elected by shareholders, and it would be my understanding that only the shareholders could replace him as a director of CCAH.
But did you, none of you then inquired as to the person? You know, shareholders just are people, ultimately.
Yes.
And didn't you ever wonder who had the authority to fire the man that you were reporting to and advising? Seems so obvious. I mean, I can't, help me understand this.
That question has come up many times over the past 9 years. I have personally asked for that information, and that information has been not given to me.
Well, who did you ask?
I asked the Clifford and Warnke law firm if I could get...
You don't ask the Clifford and Warnke law firm. Did you ask Mr. Clifford and then Mr. Altman?
No, I did not ask Mr. Clifford. I probably asked Mr. Altman.
And what did Mr. Altman tell you?
I was informed that the names of those shareholders were held in confidence. The Federal Reserve has that information, and the shareholders do not want to have their names released.
But the
and
Federal
in the
Reserve
9 years,
did not have that information.
Yes, they did.
Did they?
Yes, they did.
Did you check then to find out?
That information it's my understanding, was filed with the Federal Reserve at the time of the acquisition of Financial General.
Now, I'm going to come back to Mr. Badeau, and I notice my time is out also, and I want to be sensitive to that, but help me understand this more completely. I'm still confounded. I don't understand how people of your stature would not know for sure who could pull the plug on your chairman of the board.
Well, I can say the body of stockholders could do it. And are you asking who the body of stockholders were?
Well, I mean, if you wanted to fire the guy that you're reporting to, and as directors you didn't like what he was doing, and you wanted to get rid of him, who in the world were you going to call? Who would you have called?
Well, the stockholders had the authority.
But who would
to
you
fire
have called?
The gentleman yelled. Mr. Slattery, just 1 second.
Well, I'd like to get an answer to this question if I could. Who would you have called?
Time of the gentleman has expired. I just haven't wanted to interrupt his line of inquiry here.
You understand that?
Pardon me?
There was a shift. Mr. Abadi was no longer the man who represented the Middle Eastern interests. It shifted to another group. Is that clear?
Well, it's partially clear. I mean,
Yes,
you're telling me that Mr. Abadi apparently at one time,
group,
he's the co-founder of BCCI, and then at some time you apparently didn't know who in the world to call.
Well, Abadi got sick or became ill or whatever, and the head man of Abu Dhabi became the dominant individual.
Mr. Chairman, the answer to Mr. Slattery's question seems to me is really what happened. That's the proof of the pudding is in the eating. We got to a point where the chairman was obviously not doing the job that was necessary for the bank to be done. I went to him and I told him. And that started the process by which he was removed from the chairmanship. That was done within the scope of the board of directors.
Well, Mr. Chairman, I'm very sensitive that my time is expired, and other members may have other questions, but elaborate on that if you would, Senator Mathias, because you went to Clifford, you're telling us, and said you have troubles. Now, basically, he resigned. Is that what happened?
Yes.
So even in the process of his resignation, did you ever determine who had the authority to fire him?
Well, obviously, the board of directors of bank shares could have removed him as chairman of that board.
Let me get my panel.
And that would have happened, I think, if he had not resigned.
Okay, so you folks could have removed him. Is that your testimony?
As chairman of the board.
You could have removed him as chairman of the board. Notwithstanding the agreements that he had with Abadi that he couldn't be fired for 5 years, I believe?
Well, I was certainly not a party to any such agreement.
Which, see, again, raises this basic question that he had this sort of no-fire clause contract for 5 years or a period of time with Mr. Abadi and those people. And then you folks were on the board of directors, and apparently you had to honor this no-fire agreement that he had. I'm just curious how all this worked together.
Abadi went out of the picture.
Then who came in the picture?
Other men in Abu Dhabi.
Abu Dhabi came in the picture, okay.
Time of the gentleman has expired. Mr. McCandless.
Chairman, I apologize for having had departed. I'm trying to head off some subpoenas being issued to another department from another issue and another committee, and we were negotiating with the Justice Department. Hopefully we've concluded a successful negotiation.
Well, it's no bill collectors.
No.
Okay.
No, I'm not one of those that bounces checks, Mr. Chairman. Mr. Adams, you were with Mr. Clifford and Mr. Altman during the regulatory proceedings involving the purchase of financial bank shares. And Mr. Bedeau, you also have been with the bank since the 1970s. It appears to me that you both recall the details of the takeover attempt that occurred 10 years ago. Financial General shareholders at that time alleged that BCCI was the actual party that was trying to gain control of the bank. I'm sure that you also knew of the statements made by Mr. Clifford that BCCI had no role in the acquisition and would have no role in the future of First America Bank. You are also probably aware that the bank regulators felt strongly that BCCI should have no involvement in your bank. Now, I have a couple of questions if I am accurate in my statement. Is there any inaccuracies there, Mr. Adams, Mr. Bedeau?
I should perhaps clarify that my role, I was at the First American Bank of Maryland. I was not even on the board of First American of Maryland, and my only involvement in that process is I did attend a meeting with the Maryland State Bank Commissioner with Mr. Clifford and Mr. Altman, in which the matter was discussed. So,
I was at Financial General at that time and was involved in all of those matters. It's been a long time ago, and I haven't read the documents, but I have a pretty clear memory of it.
Well, let me try these on for size, and let's see what we can do. Why then did your bank establish extensive banking relationships with BCCI, including vouching for BCCI letters of credit when no other bank would?
We developed a relationship with BCCI because at that time they were reputed to be doing well. They were doing business with a lot of other banks. They were doing the same kinds of business with a lot of other American banks that we were doing with them. Our stockholders, many of them, we understood, had an interest in BCCI, and in fact, they were helping us get some business from BCCI.
Didn't it kind of seem unusual to you that First American Bank of New York was a virtual sister bank to BCCI? Didn't it raise any eyebrows that your New York bank was run by former BCCI employees?
The bank was not run by former BCCI employees. As I understand, there were two people out of the officer corps at New York Bank who had been former employees of BCCI. The president and CEO of the bank was not a former BCCI employee.
My understanding, maybe the record is incorrect, that I have been privileged to read, but that there were daily contacts between officers of the bank in New York and BCCI in London.
I have no information on that. There were these two officers at the bank who had formerly worked for BCCI. Whether they made contacts with BCCI in London frequently, I have no knowledge.
Thank you. On another quick matter with the time I have, it is my understanding that as directors of a bank, that you as directors must personally pass upon any loan made to someone who is a stockholder. Am I correct in that assessment? Is there any incorrectness?
Yes, that's essentially correct. We're directors of the holding company. Our individual banks make loans, and any loan to an insider it has to be approved by the full board of directors of that bank. and an insider is defined as a person who owns, I think, more than 10% of the stock of the company.
Given that as a base, then, wouldn't it be essential, if you were to perform your duty correctly, that you knew the stockholders and could then pass judgment, because you would need to know who was a stockholder and who wasn't if you were going to perform that loan function audit?
The bank boards would need to know either that the person they were lending money to was a local person and was clearly not a stockholder of CCAH, or would need to know, if it was some unknown stranger, just really what his relationship was. Our banks, by and large, have made loans in their own market areas, and have made loans to people they know or have known for a long time. Had no reason to inquire whether somebody living in Northern Virginia all his life was a stockholder.
Any of you may wish to comment on this, and this would be my concluding question, Mr. Chairman. A lot of speculation out there, and Senator Mathias took a great deal of time to try to show the credibility of the basic bank operation itself, and I respect him for that assessment. That one of the ways by which the organizational process was able to function a little maybe out of the normal orbit was that there were favorable loans given to certain political types for various and sundry reasons, who had a considerable amount of influence on the regulatory and other aspects of the governmental oversight. And as a result of that, some of the things that have developed were caused by that lack of direct on-hand supervision because of some possible political intervention, compromise, or involvement. How would you gentlemen react to that?
Are you suggesting that there were such loans in this situation?
I'm saying there is conversation out there, and I'm asking you for any comment you might wish to make on it.
Do you have any names or any dates or transactions in mind?
I'd be happy to try to acquire that information and submit it to you if you would care to answer.
I'm personally not aware of loans that would fall in that category, but if you have any information that you could give us, we'd be glad to take a look at it.
Just to be clear, we have tried to look at that and we don't see anything. And if anybody has anything specifically they'd like us to address, we'd be very pleased to do it.
Oh, if I'm successful in digging up some allegations that have some names, dates, and so on and so forth, the committee could expect a response from...
Yeah, absolutely.
Yeah, and our response is that such loans have not been made to influence policy, that these allegations are totally unfounded, and we would love an opportunity to get to the bottom of one of these comments if we could.
Thank you very much, gentlemen. My time has expired.
Thank you, sir. Mr. Kondrowski.
Thank you very much, Mr. Chairman. Mr. Chairman, if I may make an observation, this committee recently passed the Treasury recommended banking reform bill, which takes into consideration financial service holding companies and diversified holding companies. And after hearing a sophisticated board of directors come here and tell us they don't even know who is involved or owns the financial holding company, I think it's the best evidence in the world we ought to re-examine creating another holding company situation up there that, for all intents and purposes, we'll never know who owned the banks in America or who owned the financial services industry in America if these sophisticated gentlemen can't possibly tell us who owns their bank or who owns their holding company. Gentlemen, I just make the observation this would be hilarious if it weren't a reality. And you your institution and its relationship as established so far, the BCCI, to my satisfaction, leads me to believe that when you still in your testimony, Senator, use the word alleged, and when you relate to us that you're not familiar with who you could fire or who you could hire, you really shake me to my core in terms of just what we've structured out there.
If I could, I don't want to interrupt you, but
Yes.
I don't want you shaken to the core either. Maybe we can stabilize you a little bit. The names of the stockholders are known. The committee has them. The chairman has them.
But did the bank board have them?
The Federal Reserve had them.
Did the bank board have them?
The bank board has them.
You know who your owners
We
are.
know who the registered stockholders are.
And are they in fact the real stockholders?
Now, there you have the question which I discussed with Mr. Roth.
So that shows the failure of the law.
The Federal Reserve says that at least 25% of those registered stockholders have entered into loans and defaulted on the loans. Now you're talking about something which is a dispute in fact. And the courts are full of disputes of fact of this sort all over this country, and I'm sure all over the world. People say that they don't owe the money that claims are made on them to repay. That's the kind of situation you're in. And I think you're putting a test on this board of directors, which is really beyond our capacity to meet. Because
Let me ask you this simple question, Senator. When you purchased your stock, if you owned any stock.
I didn't. Let me make that clear at the outset.
Did any of the other gentlemen here buy any stock?
No member of this board owned any stock.
Okay, very good. Those people that did buy stock, wasn't the question asked by this board, particularly of your chairman and your president, where did you get that money and under what conditions? If you had asked Mr. Clifford and Mr. Altman where they got the millions of dollars to buy that stock, they would have either had to commit perjury under oath if you asked them to make an affidavit, or you would say, we've got a problem here, gentlemen. We're merging our leadership with a foreign bank.
And let me tell you that the minute we heard that they had bought stock, that's exactly what Mr. Stoffaker and I did. We went to Mr. Clifford and we said, tell us about this transaction.
And did he relate to you that he had a non-recourse, multi-million-dollar loan with a foreign bank where he was absolutely had no liability on that loan and still had the benefit of that money to speculate with the value of your stock, whether it would go up or down?
He told Mr. Stoffaker and me that he had borrowed the money from BCCI.
And was that immediately reported to the Federal Reserve?
The Federal Reserve knew it before we did.
Okay. Now, and is it my understanding that our law allows...
The Federal Reserve didn't report it to us, I might say, which might have been helpful.
Well, I assume that the Treasurer reported to you. He has a fiduciary relationship to tell you, doesn't he? Once he talked to Mr. Clifford and finds out the transaction, we can impute to you everything he knows. He's your officer.
He didn't know.
He didn't know it.
I thought you said immediately after you heard the transaction of the purchase of stock, the Treasurer talked with Mr. Clifford to get full disclosure of these loans.
No, I said I talked to him.
And he disclosed to you at that period of time, just when you were starting to come on the board, that he had a non-recourse loan for multi-millions of dollars from a foreign banking corporation?
Let's go back over this again. When we were aware of the fact that Mr. Clifford had purchased the stock, Mr. Stoffaker and I, being the two outside directors of the company, went immediately to Mr. Clifford to find out what the facts were. Mr. Clifford told us at that time that he had purchased the stock and that he had financed the purchase by a loan from BCCI.
Did you get the terms of the loan, sir?
I don't think he told us the details of the terms of the loan at that time.
Did you know his net worth and wherewithal, that he had that amount of cash to support a loan, or was it such a financial position?
I have no information about Mr. Clifford's
Did you know the amount of the loan?
Yes, we knew the amount.
And what was that amount, as best you know, Senator?
Well, the original purchase was about $15 million.
Right. And did that at all?
There were 3 purchases, as it turns out.
Okay, that was the total amount, $15 million. Did you instruct anyone, or did you in any way inquire as to where he came upon the money and under what conditions or terms?
This had all been done and repaid before we came on the board.
I understand his purchase was 86 and sold in 88.
That's right. I came on in
understood the
88.
senator to testify that he was on the board in 87.
That's
Yes,
right.
But the purchase had been made in 86.
All right. Well, once you found out about it, though, did you inquire?
Well, in 1991 is when I found out about it. And I immediately inquired. I went immediately to Mr. Clifford and I said, what is the story?
No, okay, so you're a member of the board of directors, you get on the board in 87. This bank didn't have thousands of shareholders, it had 20 or 25, aren't I correct?
That's right.
And every one of them had strange addresses, but 2 had Washington, D.C. So it would have been pretty evident to me that we got 2 Americans here and all other foreigners that are owners of the bank, and these 2 Americans happen to be the president and the chairman of the board. Didn't anyone at that point, looking at that disclosure, find out under what terms, conditions?
Yes, sir. Our auditor was the man who disclosed the incident to us.
In 87?
No. In 91.
Where were you between 91 and 86, 5 years, when the purchase was made? Now, gentlemen,
I was in a lot of places, but
you have to have reorganization meetings every year, don't you, in your bank? Don't you every year reorganize as a board of directors?
Yes, we do, and our shareholders...
Is it common in doing that someone certifies who the shareholders are and provides the board with a list of shareholders?
Exactly, and the shareholders, as I've testified here several times today, were 100% the First American Corporation, FAC. When they have their organization meeting, they testify, the shareholders then are elected by the CCAI.
So what was disclosed to you, you're saying, is CCAH?
That's right.
100%. Did you think of asking?
No, what we're saying that when the First American Bank shares is elected, it is elected by FAC, First American Corporation. That's as far as it goes.
So you were only looking at First American Corporation. After that, you didn't inquire who owned them.
At that point, that's correct.
these shares were in CCH, which the Clifford and Altman bought. They were not First American Bank shares.
Okay, so the disclosure of the board in 86, 87, 88, 89, 90, and 91, the CCH owned these shares. And at that point, you felt you have no responsibility to find out who owns CCH.
We are directors of CCH.
You have a fiduciary relationship. What happened if the Soviet Union owned CCH? Do you think we'd be interested in knowing that?
I don't know.
You don't know. So going back to my original statement when I opened, what the Treasury sent us up recommending is a diversified holding company, financial services holding company, and then banks. We're in trouble. If we pass that bill in the Congress, we've really created a monster, because Japan can buy us, the Soviet Union can buy us, any power in the world.
You're overlooking the fact that all of this is a matter of record with the Federal Reserve.
The Federal Reserve doesn't have a fiduciary relationship to your shareholders or to anyone.
They have a register, which is not available.
Senator, do you suspect that the Federal Reserve sits down every year and looks at the 16,000 banks in this country, examines who owns their shares, then knows the holding company, examines who owns their shares, all the way up every year? You've been around here too long, Senator, to think that we have any bureaucracy that even has the capacity to do that. We rely, it seems to me, in giving this franchise of deposit insurance and the right to do business in the banking community of the United States, we rely on the responsibility of the board of directors of those institutions, that they're not only going to ask reasonable questions, but when they get covered answers by holding companies, they're going to examine, in fact, whether or not there's any manipulation or any problem that they're dealing with there that they should know about. Isn't that reasonable? Or should you, are you telling me...
That is not only reasonable, but that's exactly what happened.
But you didn't check out the holding company.
I think we did.
5 years you didn't, Senator. The only time you checked it out was when the Washington Post told you had a problem. To my reading, now maybe I'm wrong, and I don't want to condemn you on it, but no action was taken. When did you and Mr. Scone take the walk down to talk to Mr. Clifford about his transaction?
The minute we found out that the transaction
How did you find out about it? In the public media, didn't you?
No, that's not correct.
Okay, how
We
far-
found out because it's as the chairman has suggested, and I think the chairman is so right in the remarks he made at the beginning of this hearing, that directors have a duty to be informed. And if they are not voluntarily informed, then directors, well, let me finish.
Yes.
If the directors aren't voluntarily informed, they have to go out and seek the information. Now,
what prompted you, Senator, to want to get
we
informed?
got the internal auditor, James Lewis.
Okay.
And we sat down, Mr. Stoffaker and I sat down with him, and we were asking him questions. We were asking questions because we wanted to know more about this relationship.
At what time? Can you give us a date on that, Senator?
Yes, this was February of this year.
Okay.
And we said, can you tell us, are there any circumstances in which there have been loans granted by First American, any one of the First American group of banks, to customers, patrons of BCCI? In other words, has there been any kind of preferential treatment? And he said no, he had no record of that. And then just to make sure that the bases were covered, we said, were there any loans, similar kinds of loans that were granted to officials of First American by BCCI?
So let me stop
and
at that point.
that's where the transaction emerged.
Let me stop at that point. At that point, then, the auditor had to know the trail of who the shareholders were of all these holding companies. He didn't find that out in February of '91. He must have known that beforehand, isn't that correct?
That's correct, because as I testified earlier, he had been commissioned.
Did you all determine when he first made that examination, or did he just make it in '91? It would seem
No,
to
I
me
think he began, as I think I previously said, early in 1990 to make this investigation, and he completed it at the end, around the end of 1990.
up till that time, then, is this an inside auditor or an outside auditor?
Inside auditor.
Okay. Up until that time, your own inside auditor never inquired into the relationship of the ownership and the various stages of the holding companies. Is that correct?
Well, that's what we were exactly commissioning him to do by that internal audit. To look at the whole relationship, to look at all the transactions, to look at the wire transfers, to look at anything that might be evidential as to the relationship.
I would understand that, and that was prudent at that time when we realized that BCCI was starting to get into trouble. But I'm curious as to why it wasn't prudent back in '86 and '87 and '88 to find out who owns you. I don't know how an officer of your bank could legitimately approve a loan and not be subject to some violation of the law if he doesn't know the relationship of this ownership of stock in your bank and the various holding companies. I don't know how it sort of goes around in a circle and closes. I don't know, therefore I can do anything.
Will the gentleman yield to me just to follow on this? Because we have this documentation that does seem to be, on the face of it, contradictory. Mr. Adams, in your response to question number 10, were you aware of BCCI loans to Mr. Clifford and Mr. Altman? Please explain. Your answer: I became aware of the BCCI loans in July of 1990 during the course of an internal audit review. On the other hand, Senator Mathias says, I had no knowledge of any BCCI loans to Mr. Clifford and Mr. Altman until approximately February 1991, when I was advised of them by the First American auditor. So how do you explain that? I think
that's the interval that the auditor was working, where Mr. Adams knew about it, but we had not been informed by the auditor.
You're both members of the board.
The board hadn't been informed.
Well, Mr. Adams is on the board.
True.
And he's saying that he knew as of July 1990.
He didn't volunteer that.
Did you inform the rest of the board members?
No, Jim Lewis, who's our internal audit, was performing an audit that was focused on relationships with BCCI. He came across some wire transfers from BCCI to personal accounts of Mr. Clifford and Mr. Altman. He reported that to me, and I instructed him to meet with Brian Yolis, who was the general counsel of Metro, and ask him for an explanation of these wire transfers. That was done, and in the course of making those inquiries, Mr. Clifford and Mr. Altman wrote a memorandum that detailed the stock purchase transaction. In receiving the stock purchase transaction memo, we were concerned first that there might be a Reg O violation. We checked that. We were concerned that these shares had been properly reported to the Fed Reserve, and we discovered they had been reported. And at that point, we documented the file with everything we had done, and had found no violations of any law or no lack of awareness on the part of regulators of the transaction, and left it at that.
Well, I wonder, you speak of this memo that you received. Would it be possible to provide a copy of that memo for us?
I'm sure you have it.
I don't think so. I'll double check, but I don't think so.
If you don't, Mr.
We won't
Chairman,
provide it, but you have it.
Well, but the point I'm asking is, why did not Mr. Adams communicate with the rest of the board at that point? In other words, obviously there were some questions here as to whether or not, once that memo was received, both Mr. Altman and Mr. Clifford had complied with the law, and there was some fear there, I'm sure. It would seem to me that at that point, that disturbing situation would have been reported to the board, to the rest of the members, and I would say particularly the senator.
Chairman, would you yield?
Yes, sir, I'll be glad to yield to you. I know you have to leave.
Yeah, I have here a memo which says Bank of Credit and Commerce International, Society Anonyme, Washington, D.C., is headed by Mr. Sani Ahmed. It's to Richard D. Barrett from Selma Hobbit. My question is, why would an unrelated foreign bank office be in the business of developing business for First American Bank shares? It says it is not a full-service deposit-taking branch, but rather an information-gathering office involved in developing business for First American Bank Shares, Inc. Memo also states that BCCI is, they refer to here as First American Bank Shares as being like one of us, referring to BCCI. Do you know about that memorandum?
What's the date of it?
It's dated on June 16, 1986.
I have no knowledge.
I'd like to ask unanimous consent this be placed in the record at this point.
Certainly without objection.
Probably don't have any record of it, but there seems to be a deletion or a paragraph that's deleted on the second page. And I'm wondering if you could search your records down there and see if you might be able to find the original to see if that missing paragraph is in it.
Yeah. Who is it addressed to?
It's addressed to Richard D. Barrett.
May I suggest that we make a copy of that and
Yes, if
provide
we
it
could
to
have a
the
copy,
witness?
it would help the search.
All right.
All right.
I thank you very much.
But if you do, you will make a diligent search and find it.
We certainly shall.
I want to follow through, though, here. Did I understand correctly, Mr. Adams, that Mr. Clifford and Mr. Altman sent you the memo?
No, they they sent a memo to Jim Lewis, our auditor.
The auditor.
To complete his documentation of this transaction, which turned up in a review of all BCCI activity.
Well, why were you selected? Why were you selected to receive that and then not have the others partake of that information? Because obviously, in the case of Senator Mathias, once he was alerted, he immediately reacted. He was alarmed. But he says he didn't know that until earlier this year, 91. So I still see, because the reason I'm disturbed is that it shows that somewhere here we've had a deterioration, or what I would say is a corruption, of the system that both regulators and the Congress or whoever in drafting the national policy have not much paid attention to in the last two and a half decades, where the whole role has changed, and it's got to be addressed, because, and particularly in today's world.
Mr. Chairman,
yes.
Just to be completely fair to Mr. Adams, let me say that he and I had a conversation. This occurred in February of '91, which really led to my meeting with the auditor. So that I think that Mr. Adams.
But had you had an inkling in July of 1990,
I'd have gone right up.
You would have,
like a rocket.
That's
as
right.
I did
See, and that's what
in
I'm
February.
saying. That obviously we have some compartmentalization even within the board structure that it's a little bothersome. I'm not trying to cast reflection on retrospect. I think at this point it's 1:25, and I don't want to abuse either the patience and the courtesy that we should owe our guests, the witnesses. They've been here very patiently, and they have tried to respond to our questions. But neither do I want to prevent any member from following through. So would it be acceptable if I recognize members for follow-through questions for 3 minutes each? Would that be sufficient? Is that acceptable? We have 4 members left besides myself. If we each were to take 5 minutes each, it'd be 20 minutes, and we probably wouldn't be out of here until about 1:45, and I think that's straining a little bit. So why don't we try it? I recognize Mr. Army for 3 minutes.
Thank you, Mr. Chairman. I want to go directly to Mr. Adams, Mr. Bideau, and Mr. Scafoni. You were all part of First American before it was taken over. You certainly, I'm sure, were aware that Clifford and Altman were the lawyers for Abedi and BCCI. Who told you that Mr. Clifford and Mr. Altman were going to take over running the bank? Who instructed you? Did they just walk in one day, start sitting down in the office and take over? Did somebody instruct you that they were going to take over the bank?
Well, let me
Mr. Adams?
speak to that. I was involved in that process, and
If
that
you can
went
get as
on.
directly to the question as possible, because my time is limited.
All right. But that was a long, drawn-out process. We understood that people were buying stock. We instituted litigation.
No. But on the day they walked in and sat down and took over an office and said, "We're in charge here," who backed them up? Who verified it? Why did you just let... Now, I understand neither one of these people were bankers. They didn't know anything about banking. One of these folks was the youngster that took over the bank, was hardly dry behind the ears. You're a banker for 20 years, and this guy walks in and says, "I'm running this bank." Did you just say, okay? Could I have walked in on that day and taken over the bank? Somebody had to tell you these guys are now taking over the bank. And I want to know who did it. Did you get a letter? Did you get a phone call? Did you get a message slipped under your door? But somebody gave you the message, you accept this guy as the president of this bank. Who did it?
There were a group of stockholders who owned...
I know there were, all right, did they send you a letter, and can I get a copy of the letter?
No, they did not send
Did
us a
they
letter.
call the phone, and if they called you on the phone, can I tell you who was on the other end of the phone?
No,
I mean, there wasn't some mysterious little message from heaven from this group of stockholders. You had to get something, did you not?
Mr. Clifford represented the shareholders.
We have gone through the whole business of the ambiguous stockholders in a fog before. Somebody had to give you a transmittal of information that you said, all right, this is not refutable. Mr. Adams, were you happy to see this young guy come in and take over the bank that you'd worked in for many years?
Well, I learned about it officially at a management meeting that announced it, but the answer to your question is there was a board of directors, there were shares voted, and the board of directors...
all right, so they took over the bank.
I mean,
you
the
later...
regular corporate process determined it. It wasn't...
I understand. Mr. Chairman, I only have one more question. Gentlemen, when did Mr. Abedi leave the country and tell you all to play dumb until he gets back? Thank you.
Well, the gentleman still has time because I don't count the response time. I just count the time it takes you to ask the question.
I'm sorry, Mr. Chairman, but there is no sense in asking these people questions. Maybe under subpoena in the federal courts or something, you can get some answers out of these, but this, quite frankly, is ridiculous. And
Mr. Chairman, I regret very much that this...
Will you yield to me? I must say that the rules compel the chairman to protect the integrity, the good name of the witnesses and members and anybody else called here or subject to the jurisdiction of this committee. The gentleman from Texas, my fellow Texan, is raising a question here as to non-responsiveness that goes to the integrity of the witnesses, and I think that's to be regretted, and I would ask the gentleman to strike those words, if he will. I think that we must not forget that this is a proceeding under our rules providing for investigatory processes. The rules we're operating now, which the House rules designate as Rules 10 and 11, are very carefully crafted as a result of unhappy experiences where the legislative branch, known as the Congress, abused its powers. And so we have a very intricate set of rules protecting all the rights of the people that have accepted either voluntarily or through subpoena their rights and their right to the integrity of their character and their name and so forth. So if the gentleman doesn't want to pursue any further questions, that's one thing. But to say that the gentlemen are in effect non-responsive is another thing. It's a matter for the record. If the gentleman is implying that perhaps they're in effect perjuring themselves, let me say that they're under oath. They've taken an oath.
Mr. Chairman, I have not implied that the gentlemen have perjured themselves.
Okay.
In order to
All right.
perjure yourself, you have to answer a question. They have not done so.
Okay,
I'm
sir.
saying there's no sense in continuing to question these people because you can't get an answer. And therefore, I relinquish my time.
All right, sir. See, do you have any further questions, Mr. Moran?
Thank you, Mr. Chairman. Let me address these to Mr. Scafoni. What is the value, to the best of your knowledge, of National Bank of Georgia today?
I don't have that information. I could get it for you in just a second, if you'll
Well, if it's
bear
just
with
a
me.
second, sure.
Go ahead and ask me some other question.
Well, it's largely based on, I do want to see that, though, and what you would project, because I'm still stymied by a letter that was sent from Mr. Altman to Mr. Swali Naqvi. We talked about this letter in 1986. You are aware of this letter that was sent to Mr. Naqvi?
I was not aware of it until it was shown to me today.
Well, Okay, the problem is that it's based upon your analysis, and Mr. Altman must have given you some indication as Senior Vice President and Treasurer of First American Bank Shares what was going on, because the purpose of this letter is to transmit your financial analysis to Mr. Naqvi. Mr. Altman says, in the analysis prepared by you, the stockholders' equity of National Bank of Georgia would be $93.9 million, considerably higher than the year-end numbers on which we had been relying. He goes on to say the transaction we structured contemplates $60 million in debt. It would be appropriate if BCCI itself wished to consider being a lender. And the last sentence in the letter is, I trust you will forward this information to Mr. Abidi. And then it includes the analysis that you made. Now, if you would tell me the value of National Bank of Georgia in your best professional judgment right now, Mr. Escobar.
The book value as of August the 31st, which does not represent fair market value, of course, was about $85 million.
About $85 million. Now, in your analysis, you estimated that the purchase price should be from $152 million to $161 million, based upon the various multiples that, as a result of an analysis of 183 deals nationwide, 118 for stock, 65 for cash. This is your memo I'm taking it from.
Yes.
Okay. Can I continue with this, Mr. Chairman? Thank you. So you estimate it would be $152 million to $161 million. Now, as Senior Vice President and Treasurer, First American Bank Shares, you clearly have some major fiduciary responsibility for the money that's involved here. And it was First American Bank Shares that owned National Bank of Georgia. The National Bank of Georgia is part of the structure under First American Bank Shares. Now, you wound up paying $220+ million for a bank that today is worth $85 million. And even under your most generous analysis, and when I look at the numbers here, I don't see why you wouldn't have made a more specific analysis than to take nationwide the average of nationwide deals and to get there the multiple of book and the multiple of first quarter annualized earnings, because given your fiduciary responsibility, you want to get the best deal possible in terms of the purchase of National Bank of Georgia, you would think. And that's why I keep coming back to this, because there's something really strange here. So you say that, in my opinion, a fair purchase price for National Bank of Georgia would be approximately 2.25 times book value. Now, that's not what you wound up paying for the bank, is it?
We paid,
By a long shot.
under this analysis, it was $211 million. By the time we transacted the deal, it was $227 million.
$227 million for a bank that's worth today 85. And then in your memo, you say, and I mentioned this before, that you're estimating that $60 million could come from a third-party lender such as BCCI. I'm just using your words. Now, when we asked why you would pay such a high premium for a bank in Georgia, why you were so anxious to buy National Bank of Georgia at what appears to be an enormously high premium, you said that it's because you wanted to be located in the Atlanta area. It's a terrific market, and you talked about Southeast and so on. But you never pursued any other banks in Atlanta. You only focused on one bank in Atlanta. It seems to me that if Atlanta was such an important place to be located, why wouldn't you have looked at any of the other many competitive banks and made some comparative analysis of them?
At the time this transaction was being viewed, National Bank of Georgia was for sale, we were competing with NCNB to purchase this bank. And that's the only answer I can give you,
Well,
Congressman.
Mr. Scappa, I really don't have any interest giving you a hard time. I don't want to give any of you a hard time. The problem is that the buck has to stop someplace, and you had the title as treasurer and senior vice president. So you have a substantial fiduciary responsibility to not only to the stockholders, but also to the depositors of First American Bank share, of the banks under the First American Bank Shares umbrella. And here you are recommending that you pay really an exorbitant amount for a bank that today is worth 1/4 what you paid for it. And you're also, in your memo, recommending that BCCI, a foreign investor, play an absolutely essential role in the purchase. And yet you are very much aware of the fact there isn't supposed to be foreign ownership of banks. You're very much without disclosure and so on. But I mean, this is a very sensitive area. You are recommending that BCCI provide the money. And then you were obviously very much aware of the fact that Georgia law had to be changed to make this transaction work. And you are recommending on this acquisition alternatives best effort to change Georgia law to allow CCAH to acquire NBG within a year. We have information that we spent $1.5 million to do that. You must have known more than is immediately apparent, Mr. Scafoni, or it's inexplicable why you wouldn't have asked more questions. You know, I'm not suggesting that you made you made decisions that were that are illegal. I'm not suggesting you made those decisions, but I'm very much questioning the extent to which you complied with your fiduciary responsibility as treasurer and senior vice president of First American Bank Shares to prudently handle that account, that responsibility. Now, can you respond in any way on the record that would give some better understanding to what seems to be so inexplicable?
Congressman, I've worked for First American or Financial General for 25 years, and I believe I have always acted in proper manner. I'm aware of my fiduciary responsibility. I'm aware of my responsibility to both stockholders and depositors. There's nothing in this transaction or my involvement in this transaction would lead me to think otherwise.
Why wouldn't you have looked at the other competing Atlanta bank? Can you tell me that this was a fair price that was paid, $227 million for a bank, given the numbers that that bank showed in 1986, and given the fact that Georgia law had to be changed to allow CCAH to purchase it? Can you honestly say that was...
Let's go back to my opening sentence in my memo. Mr. Altman had asked me to do a particular project, and you have asked me to analyze the potential acquisition of the National Bank of Georgia, and that's exactly what I did, with the facts that I had at the time to try to do a deal that would be favorable to First American Bank Shares, and that's what I did.
But what we've been getting in all these questions is a very limited functional role. In other words, nobody asks any questions. Nobody uses their experience and judgment. They're told to do something, they do it. Don't ask any questions. You know, I didn't know that who BCCI was and so on. There must have been some reason why NBG would be purchased for $227 million. You must have known the background of the original Ferrone purchase. I guess your lawyer wants to advise you here first.
Would you continue with your question?
Your analysis led to the purchase of NBG, the acquisition of NBG under the First American Bank Shares Corporation, an important element of the corporation for which you were treasurer and senior vice president. So this was a critical decision-making memorandum. Now, I'm giving you a lot of, I'm assuming, giving you a lot of credit that, which I think is justified, that before it's $227 million is committed, and before you make such an important acquisition, you would perform the normal financial analyses. An obvious one would be to look at the other banks in the area. It would be to look at the history of National Bank of Georgia. National Bank of Georgia has a really checkered history at that point. You knew about Mr. Ferrone. You must have known about Mr. Lance and how NBG was going down. He was in debt. He got bailed out for twice the value of the stock. You must have known all of these things. You're sitting in a critical place where it's your role to make a judgment, to assume fiduciary responsibility of funds, to do a complete analysis. And it seems like this is less fiduciary responsibility was given here than you would give with play money and monopoly. And I'm giving you an opportunity to give us complete an understanding, a clarification as possible on the record for how this occurred. We're obviously going to be talking with play money and monopoly. And I'm giving you an opportunity to give us complete an understanding, a clarification as possible on the record for how this occurred. We're obviously going to be talking with more people subsequently, but this is your chance to say, that I did everything that I could have to exercise my fiduciary responsibility. This is what I did. This is why I think $227 million was an appropriate purchase, because it's not clear in the information we have, and it's certainly not clear on the face of it. Do you have any further comment?
I mean, I really don't know how to respond to that. The memo was clear on its face. I think it sets out all the facts involved in the transaction. It's second series in a memo that was written back in October '85, which discusses a more detailed analysis. The company was interested in getting into the Atlanta market. There were very few banks available. This bank was available, so Mr. Altman asked me to make an analysis of it, and that's what I did.
Excuse me, Mr. Scafone, will you yield to me here? You referred to this memo 1985.
Yes.
And I wonder, would you make that available to
Absolutely.
the committee? Okay, for the record.
I assume that you all had that information.
I'm not that sure that we do. And to make sure, I was going to ask you if you could let us have a copy of that at the proper time.
Did you ever raise, excuse me, Mr. Chairman, let me just ask one. Within the board of directors, to the board of directors, did you ever raise a comment that this appears to be a pretty high purchase price for National Bank of Georgia, since the board of directors would then be responsible for the management of National Bank of Georgia, as well as First American Bank of New York and the three Metro Holding Company banks? Did you ever make any comment with regard to the real value of the bank versus what we paid? You never advised the board of directors?
There may have come up in board meetings, the discussion of this transaction, but I can't recall specifics.
Did any member of the board of directors question how you were going to change the Georgia law to allow CCAH to purchase the National Bank of Georgia within a year? Did anybody ever question how that was going to be done?
I believe Mr. Altman and Mr. Clifford knew that. I don't know whether the other board members that. I can't speak to them.
But the board members are going to be responsible for the acquisition of it. As you know, there's a very serious allegation that $1.5 million was spent to essentially buy the Georgia legislature. Now, that's an allegation, granted, but a lot of money was spent. The law had to be changed. It had to be changed in a year, and a tremendous amount of money was contingent upon that law being changed. And it seems to me that questions should have been raised during that period of time. Are we doing the right thing with regard to the money we're responsible for and with regard to our responsibility as directors of this board that is going to be acquiring NBG?
Time of the gentleman.
Okay, thank you, Mr. Chairman.
I would like to offer for the record and ask unanimous consent that an article appearing in today's Atlanta Constitution, apparently it's front page, BCCI tied to change in state law, House Speaker's trip linked to bank lobbyists, and it goes on, it has some very interesting contents. What I can do at this point is offer it for the record and then ask the staff to make duplicate copies and furnish them to you now.
With this,
yes, I was going to ask unanimous consent that following your questions it be placed in the record, because it's in connection with the question you were asking. Mr. Riggs, do you have a follow-up question?
I certainly do, Mr. Chairman, and I'll try to be brief. I think I did go over and see very punctually observe the 5-minute limit earlier today, so I might ask the chair for his indulgence and thank him for extending time of these hearings so that we could probe at some answers. Frankly, gentlemen, the term that keeps coming to mind throughout these proceedings has been incredulous. And that's very disappointing. In fact, someone jotted down for me here, see no evil, hear no evil, speak no evil, and I wasn't there at the time, seem to be the common refrains that have run throughout all of our BCCI proceedings. And that's unfortunate because, hearkening back to the beginning of today's proceedings, I described how Mr. Clifford came before this committee with Mr. Altman, represented by counsel, and testified in very glowing terms regarding the sterling board of directors and management team that he had been able to assemble at First American. And frankly, what we've heard today is testimony replete with instances that I think would call into question the competency and reliability of that board of directors and the management team. And I want to ask, or at least so that you have an idea of what I'm referring to, cite for you some specific examples here in a moment. But I want to go back for one moment more to the compensation package for both Mr. Clifford and for Mr. Altman. Did the board of directors have an executive compensation committee?
No, it did not have a separate, well, it had a separate compensation committee some years ago. It has not been active for the last.
Did the board of directors set compensation for Mr. Clifford as chairman of the board, Mr. Altman? I believe Mr. Altman had the position that you now
No, he did not
hold.
The board of directors set the compensation for the outside members of the board, and which included a payment to Mr. Clifford as chairman of the board. Mr. Altman received for the company the regular board fees that any outside member of the board was entitled to. Inside members of the board, that is people who work for the company, do not get board fees.
And it never seemed curious for you. Now, granted, you may have known about the significant legal fees that Mr. Clifford and Mr. Altman were making in their representation of BCCI, which had these very close ties and inner workings with First American, but it never seemed curious to you that Mr. Altman wasn't drawing a salary for his duties? What was his actual job title, president and CEO?
He was president of First American Corporation. He was not an officer of First American Bank Shares.
I see. And that never seemed unusual to you, those of you who were directors.
Well, he spent part-time on this company. He did legal work. He did get legal fees from the company. And he had other clients. And I wasn't worried about whether he was making an adequate income.
Senator Mathias, I want to follow up a question that was asked earlier to make sure I'm explicitly clear in my mind. You say that you went to Mr. Clifford. I don't know if you also said Mr. Altman, but you went to Mr. Clifford when you learned about his stock sale and the very significant sum or proceeds that he had generated for that stock sale. Were you aware at any time prior to the fact that Mr. Altman had obtained a loan from a BCCI subsidiary in order to purchase that stock? You see, you've testified today it was the first you knew of the stock sale, but did you have any prior knowledge of his stock purchase or how he arranged the financing for that stock purchase?
No, you're talking about both the Clifford and the Altman stock purchases. I learned about them simultaneously from, as I say, the first authoritative word I had on it was from the auditor in response to my question as whether he had discovered any loans made by BCCI to First American personnel.
So that was the first that you knew of any aspect of the stock transactions that Mr. Clifford and Mr. Altman participated in? Okay. I want to go back to Mr. Adams, ask Mr. Adams if he's been able to recall now any other banks that did letter of credit business with BCCI other than First American and its various subsidiaries.
I offered to follow up in writing just in the interest, but if that's unacceptable, they had significant relationships with Security Pacific, with American Express, with Bank of New York, with Citicorp, and
are you aware
that I'm aware of
correspondent type banking relationships? You're not aware of as to whether or not that specifically involved the extension of lines of credits?
Well, that
some sort of credit facility.
Yeah, I'm sure it did. It was in the process of doing really normal, routine trade transactions.
Did you participate loans with BCCI?
No.
Neither through the Washington or Virginia branches?
No.
Any other gentlemen have any other things to say about that? Okay. Did you seek? Well, I know you did because of a memo I have, and that's one of the specific examples I want to go to now. Apparently, you sought the business of BCCI. I'm looking at a June 16, 1986 memo. It talks about soliciting BCCI's business and lists a number of people as potential contacts in BCCI, talking about, again, using BCCI services for advising international letters of credit and the like. One of the people listed here is Amjad, if I'm pronouncing that, Awan, who I understand he was referred to here in the memo as, quote, our Latin connection. Any of you have any knowledge of Mr. or our dealings with Mr. Awan? I believe was.
I've never met the guy.
Never met. Okay. Are you aware, for example, that he's a convicted money launderer?
I've read that in the paper recently, yes.
And that's the extent of your knowledge?
Yes.
Anyone have any different knowledge? Okay. I'm also wondering if you're aware of a specific transaction, again, as directors, and again, going back to Mr. Clifford's comments about the outstanding board that he had been able to assemble, and the performance of your fiduciary obligations as board members, directors. I'm wondering if you're aware of a specific transaction where BCCI Washington cast a $60,000 check and gave that money to Manuel Noriega. And this was, I believe, in 1986, a short time, I might add, before Mr. Noriega came here to Washington for hearings regarding his alleged drug operations in Panama.
BCCI had an account at the Washington Bank and wrote checks on that account. And I understand that a few of those checks had written down in the for column Noriega.
When did you understand it, or when were you aware?
Well, I learned of that in the last year or so.
Did you have any subsequent conversations with the individuals in the bank operations who knew of those transactions or may have had approval authority for those transactions?
Well, I don't think there was any approval required. BCCI had a bank account, and they wrote a check on the bank account.
This is a bank of account here.
They had a bank account in the Washington Bank. They wrote a check on it, and it came to the bank and was paid. And those things are handled mechanically and electronically.
So you didn't know about it, and it wouldn't have raised any eyebrows if you had known about it?
No, that was in 1986. I understand in 1987, the U.S. government was writing letters to Noriega telling him what a fine job he was doing. So
yeah, we might get to ask some questions about that one of these days.
We wouldn't have reacted to it.
I also want to go to a letter December 13th, 1989. It's from one William Ryback, Deputy Associate Director for the Federal Reserve System Board of Governors. It's to Mr. Altman. And in it, he raises the concerns regarding the potential, or some of the allegations that were floating around, that investors, your shareholders, or the shareholders of one of the parent companies, may have borrowed funds from BCCI, and in his letter, he asked Mr. Altman to provide, quote, information on any loans extended to the original or subsequent investors, either directly or indirectly by BCCI or any of its affiliated organizations. I'm told that in his response, Mr. Altman was less than forthcoming. For example, did not mention the loan I referred to earlier, the loan to Mr. Mohammed Hamoud, the gentleman who had obtained the letter of credit to guarantee the performance bond for the development project in Alexandria. Were any of you aware of this correspondence between Mr. Altman and the Federal Reserve?
I was not.
As directors?
No, I did not see that correspondence at that time. I've seen it recently.
Let me conclude by asking, I guess, the essential question that comes to my mind, and that is whether or not this was a caretaker, passive type of board, or whether it was more of a hands-on board, and the extent to which you relied upon representations made to you by Mr. Clifford, or for that matter, by Mr. Altman. It seems to me that there, if not any intentional misconduct or misrepresentations, there certainly was rife throughout this whole business a lot of secretive dealing, insider type of dealing, I guess, in one sense. What was the interrelationship between the board of directors and Mr. Clifford, and what was the frequency of contact with Mr. Clifford and Mr. Altman? And did the board in any way, shape, or form set policy, or was the board actually directed by Mr. Clifford and by Mr. Altman?
Let me try to make a first cut at that out of my own experience. Take the First American Bank of Maryland, for example. At the First American Bank of Maryland, there was intense participation, as Paul Adams can verify, by members of the board of directors. They looked at not only loan policy and loan procedures, but they looked at individual loans. They voted on if there were any insider loans. They voted on those questions.
Except, for example, the insider loan that I've mentioned, and I guess the reason you didn't get a chance to vote on that is that you weren't even aware that this gentleman actually owned in excess of 5% of the parent company stock. I'm referring again to Mr. Mohammed.
Mr. Mohammed.
We don't.
Anyway, please continue.
The participation is very active and is really independent. And I'd like Mr. Adams to comment on that in a minute, too. Now, the bank shares had 4 meetings a year. Those meetings were largely devoted to a review of the financial activities, the financial results of the subsidiary banks. as opposed to the activity at the Maryland Bank, which I use as an example of the subsidiary banks. They dealt with policy questions. Because it was 4 meetings a year, you had to paint with a fairly broad brush. But there were many questions asked. There were detailed information sought. We obviously relied upon, because that's, I think, normal in any corporate structure.
Well, let me break in at this juncture, Senator, because I think you've made that point adequately in your opening statement. And now let me just ask, the pregnant question. Do you believe, any of you gentlemen, do you believe that Mr. Clifford and Mr. Altman had personal knowledge of BCCI's penetration of First American Bank and their ultimate ownership of First American Bank?
You're really asking us, were they lying when they told you otherwise here in this committee room when they appeared?
You're a director to exercise your independent judgment and authority, and that's what I'm asking you. In that capacity, did you or do you believe that?
Well, the gentleman refrained. You know, a while ago, Mr. Army talked about, well, wait till they get subpoenaed in the court of judiciary, court of justice. Well, if they did, they'd have protections. And even from your question, you're asking a question that calls for a conclusion that the gentleman wouldn't be in a position to know. I mean, they can't testify as to what we had Mr. Altman and we had Mr. Clifford here under oath. They were under oath. And we can't ask these gentlemen as to whether or not, as the senator was about to say, whether they think they were lying. I think that's something that perhaps is quite unfair to ask the witnesses, if I may be so bold as to say. And I would ask the gentleman to withhold on that question.
Well, can I just thank the chairman for his intervention there? I do exactly share his sentiments, and I think he and I understand really what rights of people,
Right.
individuals are involved here.
Well, we have that duty, responsibility to be sure that we're aware of the rules and rights of everybody, not only ourselves, but you gentlemen. So I thank you, Senator. Mr. Kondrarsky, do you have any additional questions?
I'll try.
I might point out that the chair has been as liberal as it has, even reluctantly, because of the fear of imposing on the witnesses. Mr. Riggs, for instance, on this last one, you had a little better than 15 minutes. And
we won't take that.
And that's all right. No, you know, I respect that. And if I could ask you to stay here until Mr. Kondrarsky finishes, I'd like for you to, I wish Mr. Moran had, because I'm going to make an observation here that I think the record ought to reflect. Mr. Kondrarsky.
Yes, Senator Mathias, I want to direct this to you because my original examination, I didn't want you to jump to the conclusion that I've prejudged anything that you've done, sir, or am I casting aspersion? Quite frankly, I'd like to congratulate you on the record from your testimony as to what you said when you did find out of the involvement of Mr. Altman and Mr. Clifford in this transaction. I think you did the exact right thing. What I'm disturbed about is why our directors don't find these things out earlier and what we should do in the law to make sure that they do. But I've always had, even though we're different parties, I've always had the fondest regard for your integrity, sir, and I want you to know that.
I appreciate that.
These things do get testy, as you spend so much time on our side. You know what we're striving at. One of the things that disturbed me in Mr. Clifford's testimony and Mr. Altman's testimony is they always made these wild assumptions in terms of that the story held true if everyone were aware of the facts. For instance, as my colleague on the other side talked about the salary. They only accepted $50,000 a year salary, even though a usual salary in this area for the role of chairman or president would be in the neighborhood of $1 to $1.3 million. The only explanation for that, for them, for the shareholders, or for the directors, is if you were all aware that there was another source of compensation. Now your testimony is clearly that you were not aware of the stock transaction. So I'm trying to figure out why in my mind, when you sit down and set out the salary that the chairman should get, that the president should get, and clearly that's a board decision, why doesn't a bell go off when you're paying a person 1/26th of the market price? Isn't it something that, and if you rationalize and said, well, their law firm represents us, I don't think you mean to impute that their law firm were overbilling and that's how they're getting their compensation. I assume their law firm's a reputable law firm that in fact does hourly work and bills on an hourly method for work done, so there's no greater reward to these gentlemen through getting legal fees. Why didn't this bell go off? This is either they're not getting compensation from the corporation, they would have to be unethical to be getting compensation through the law firm. So why didn't the question present itself, are they getting compensated by someone else, BCCI, other people, unbeknownst, or is there a side deal? Why didn't that go on?
Let me reflect a little bit on how that came to my attention. As this committee knows from Mr. Clifford's testimony here, he tends to be anecdotal. And if I can search my memory, for the first time this subject came up, he told the story of having met with the original investors, and at the time that he was asked to be the chairman, and that at that time the question of compensation had come up, and that he had said that he would take the nominal sum of $50,000, and that he had never wanted to change that from that original conversation. He was satisfied with that and wanted to hold on to that figure. And that was an explanation which, as I recall, he gave more than once during meetings of the board when compensation was discussed. Maybe Mr. Beto would have a different recollection.
Will you yield to me, Senator? Maybe I'm the one that's confused. But the $50,000 was a compensation paid not by the bank. Wasn't it the holding company?
That was paid by First American Bank shares as a stipend as chairman of the board of First American
As chairman
Bank
of the board,
shares.
okay.
That's correct.
And then he drew director's fees the same as other outside directors.
Yeah.
Okay.
That's correct.
Yeah, you're correct, Senator. He was anecdotal, and in fact, he gave that as a reason why he felt that it was more than legitimate and proper compensation after he had brought up the bank to number one, or the holding company to number one, that he could go back and say, now, boys, I want to cash in and I want to get some stock, and he did pretty good. He made a $10 million profit on the transaction. But that was anecdotal, and that was the point.
But he didn't go back to the boys.
Pardon?
He didn't go back to the boys. The boys that were setting the salary are sitting right here. He went back to other people outside of the deal without the knowledge of the boys.
That's right.
The senator didn't know he had this side stock deal for 5 years. Is that correct, Senator?
That's correct.
Am I willing, and I'm not going to put you on the spot, perhaps it's clear. When you did find out, could I assume that you were extremely disappointed?
Well, I was extremely upset, as illustrated by the fact that Mr. Stoffaker and I immediately went to Mr. Clifford for an explanation.
And I won't push that line any further, Senator. I appreciate that answer. Now, my last question will be that when Mr. Matterly was here from the Federal Reserve, I pointedly asked him a question because I myself have not come to the final conclusion of why BCCI spent all this time and all these machinations to get control, or ownership at least, of First American. And at a direct question by myself to him, I asked him whether or not there are any past or present public officials who received loans from First American, and whether or not there was any preference involved in those loans. And his response was, yes, we are looking into the matter, we're not at liberty to discuss this. Are you members of the board aware of past or present public officials, either on the federal, state, or local area, that have received loans that are either preferential or just regular loans from First American?
I have no such.
Well, I'm confident that we have loans to present and former government officials. I'm also confident that none of those are on preferential basis. We don't redline government officials.
I understand that, but we can assume there are no recourse loans out there to public.
There are no non-recourse loans to anybody from First American bank shares.
That part of the problem didn't filter down, I assume. I'm glad to hear that. Are you making an examination now, because there's, as I understand it, a further investigation toward referral to justice of some of these loans? Are you aware of that? And are you actively participating with the Federal Reserve, the Justice Department, to find out what these problems are?
All we know about those loans are the remarks that were made up here. We're curious to know what anybody's talking about. Nobody has suggested a name. We don't know where to look to see if there's a name. We simply know of none. And we didn't know that anything was being referred to justice. If they have any names, give them to us. We'll check it out.
Okay, if you could, and I'm just going, you've seen this whole thing play out now. Do any of you have any insight that you can give to the Congress in regard to why did BCCI go through these convoluted activities to gain ownership or control of First American? Do any of you have any suspicions or suggestions as to why that could occur or did occur?
I don't know why they occurred, and that's one of the mysteries in whether these things really happened or not.
Well, you yield to me there, Mr. Kondrowski. When we had the hearing, and we had Mr. Clifford and Mr. Altman, I placed in the record the schematic plan that had been presented to Mr. Abadi by Mr. Alfredi. And among other things, they had it, he was analyzing the U.S. market, and they outlined their plans very, very explicitly. And in fact, they even used some phrases that I remarked at the time we had the hearing. I don't think you were present. Introduce new products and services to provide greater facilities to customers, et cetera.
That, superficially, that would be the reason why banks acquire banks. But what
no. They were more explicit than that. Mr. Alfredi had been an employee of the New York Bank, and he was saying, here's what you want to do. Here's the way we scope it. In our second phase, and we have a sound and product, and we've developed. We go for financing of factoring and leasing small companies, export trading corporations, syndication on a large scale, U.S. government financing, AID, export-import banks, OPEC, central banks, selected third world countries, and of course, financial institutions that they could purchase.
I understand that, and those are all legitimate business activities, Mr. Chairman. What I'm suggesting is there's a pattern here. With the purchase of the stock from Mr. Clifford, it is highly inflated as compared to what you were willing to pay other shareholders for that stock at that very time. I think it was maybe 1 or 1.5 times more than was offered to other people who held stock interest. I think Mr. Moran has indicated here a very high premium paid for this National Bank of Georgia situation. That for some reason there seems to be, in my mind at least, the suspicion created that there's something much more here than just financial activities of a standard operation within the American market. The premiums paid, the unusual convoluted activity, the insensitivity of Mr. Altman in responding to the Federal Reserve about his transaction, all this seems to be a very controlled situation. Thank you very much, Mr. Chairman, and may I congratulate you. I think you certainly have helped those of us in the committee that want to discover what we have to do in the future to try and prevent these occurrences.
I thank you very much, Mr. Kondrowski, and I do appreciate your contribution and your help and your membership on the committee. In connection with what you just said, we had the Federal Reserve Board president of the Atlanta Bank, and he was explaining, and he gave us the dates that in 1981, 82, 83, BCCI was able to get the Florida chartering of 3 banks in different locations, Miami, Boca Raton, and I think Tampa. At that same time, the Federal Reserve Board, mostly on my urging and pushing, the committee chairman and finally the subcommittee chairman, was giving us the startling accounts of the cash transactions that were taking place in those locales. So here's one branch of the Federal Reserve Board saying, hey, look, there's something funny about these cash transactions. They must be drug laundering money operations. And here they were present when they were having the reports that BCCI was establishing these 3 different banks. So you do have the right questions here to pursue, and that I think we have paramount as a duty to find out and how we can correct it. And even now with the amendments thus far adopted in the bill we passed out, which obviously we're going to have to fortify, so we'll be open to some suggestions on your part. What I wanted to say to you 2 gentlemen was that, in all fairness to the witnesses, and I wish Mr. Moran had been here, there's a phrase in law, you know, nunc pro tunc, now for then. We can evoke, unfortunately, and maybe it is fortunate we don't, 85 and 86, these are high-riding periods of time. They were go-go era. The 70s had come and gone with the great money manias that had been generated. And here we had what to do now. So during that administration came the change of policy that enabled the funding of our debt and everything else to be provided for by foreign countries, foreign investors. And Mr. Scafone was not, in all fairness to you, Mr. Scafone, you haven't brought out that you were not on the board of directors in 1985 or 86. You were an employee. And you had a request from the president saying, look into this, and there may have been some corollaries surrounding side instructions, who knows. So you were given your report not as a member of the board of directors, but as an employee. Well, I don't think that was clearly defined here, and I think in a way it tended to be unfair to you. And being now accountable for something that, in retrospect, had you been a member of the board of directors, you might have been accountable for. If you have an instruction, you report the best you can. If the idea is that the president is asking to get an estimate and an evaluation of how best to get that bank and what it involves, well, yes, you were informed you're going to have the state of Georgia change its laws. They did. But then in the interim, eventually you become a member of the board. I think in all fairness, the record ought to show that. I think that generally the atmosphere was still prevalent that had begun in the late 70s, where, how do you explain, Mr. Kondrarsky, that the chief experts of our banking world, of the 7 or 9 chief big banks of our country, how do you explain that they could go out and in a year and a half, by 1979, have gone from about $3 billion to over $45 billion in their overhang to these so-called third world countries? How could they have done it? I was chairman of the subcommittee on international finance. And when I got the statistics from the Federal Reserve Board in the summer of '79, I took a special order on the House floor, pointed out that these countries would not ever be able to pay back on the basis. The answer was, this is Arab oil money we are recycling. And I'm sure this is what Mr. Altman and This is my surmise, and this is still the era. Remember, this is still the atmosphere. You know, what's wrong with all this money coming to the United States? It's Arab recycled money from the increased price of the oil in the early 70s and most American dollars. And, what was wrong was that when it reached the point that these loans were equivalent or in excess of the capitalization structure of those banks, you had a problem. And that's what I was saying in August of '79. Well, I was accustomed, you know, you didn't have TV coverage or anything, nor did I expect it. But the then chairman of the Federal Reserve Board, Mr. Burns, called me the next day and invited me to have breakfast with him. And that's what he brought up. He said he was concerned and that there wasn't anything he could do, and that's when I got worried. Like this morning, I'm worried now, because obviously we have many weak points in our institutional armor, financial institutions. But anyway, the point is that we can't evoke that world now. You know, so you had a rich Arab or a Pakistani or somebody who wants to come in and throw money around. Gee, that's great. Not on the road to Damascus, but on the road to the bank in downtown Washington, I could see where that light hit Mr. Clifford, who decides that he's going to be a banker.
Suggest, though, that
Certainly.
some of these third world nations come into the United States to throw their money around. Maybe they could stay at home and we'd have to throw less of our foreign aid over in their countries.
Unfortunately, I'm afraid that they weren't dumb either. And in fact, I think they've ended up in out slickering bankers. But how could you explain the leading bankers? I recall that I got up, and in fact, I even introduced a resolution to impeach Chairman Volcker later, for the reason that when it became obvious that those countries were not going to pay, and the high interest rates they were going to expect to begin with, there again it was greed, were not about to materialize. And look where we are today, where they've had to really reach that point of peril. This is what's been dragging the biggest banks. Now, how could you explain the biggest bankers getting into that kind of an arrangement? The reason, again, I say, is that there was a lapse, and you had false notions, as Mr. Riston, then head of the City Corps, said in reply. I've been making some noise there, and of course, I was ridiculed, but the reason was that Mr. Volcker was meeting in private with such guys as the Hunt brothers in a motel down in Florida with Mr. Riston to see how they could save the bank credit that had been involved in the failed attempt of Hunt to corner the silver market. All of that was tied in. And so what I was saying was, well, Mr. Chairman Burns, why don't you do something about it? You can't allow this overhang because, sure, it may be Arab money, but it's deposited in an American bank that in the name of that bank is being loaned. And he said, well, there's not much I can do. When I brought it up at the convention of the bankers, they almost threw me out. And I said, why not? You have Section 14B of the Federal Reserve Board Act. You can insist that they increase their reserves to cover the eventualities. Well, the rest is history. The point is that we're facing the same thing now. We're not going to be the saviors. It's too late. All we can do is try to discharge our responsibility in anticipation as we read of the experiences of how we can offset what obviously is going to be a day of reckoning.
But, Mr. Chairman, may I suggest something?
Sure.
In the nature of Senator Mathias here, we have an asset. It seems to me that we in the Banking Committee in the House at least have cooperated to a very large extent with the Treasury and with the administration in drafting the reforms needed to expand powers.
We have.
And as we've seen here, obviously the administration, the regulators, and the Treasury do not have a handle on what's happening in these holding companies, and they can't identify. You know, maybe we could say Senator Messias is an old Joe Kennedy from the days of the boilerplate operations, and as Mr. Kennedy, the ambassador, was called in to help write the SEC legislation.
That's right.
Maybe it's time the Congress call in experienced business community members of the board who are former legislators and have seen the problems from the inside after the fact. What doors do we close? What records do we set up? What do we have to see? Instead, we're going right out and doing the same thing and passing the same types of laws, all based on a fallacious assumption at this point, that the Federal Reserve either is doing or has the power to do its job, that the Treasury is doing or has the power to do its job, that the regulators is doing or has the power to do their job, and we have first-hand evidence here that it's not happening. Maybe we should ask the senator to, using his experience as a legislator, to come forth with the Senate committee and our committee and start structuring a piece of legislation that's not going to protect the international bankers, that's not going to make a better playing field out there for the financial speculators in America, but protect the depositors and protect the taxpayers of the United States.
Well, I agree with the gentleman. I think that's, in fact, we have intimated that we were seeking not only testimony, but suggestions and recommendations, if any. And I think you're right. I think we could benefit a great deal from a gentleman like the senator as well as his colleagues here. After all, we're not bankers, and but we are on the banking committee. And so we're charged with at least knowledge of the law and what it takes to keep up with the times from the standpoint of defending the public interest, the greatest interest of the greatest number. That's it.
Mr. Chairman,
You have
I'm
any
honored by that suggestion, and I would just like to say, to the extent that I can be helpful in any way, and we can continue this communication that's begun today, and I'll be happy to do that. While I'm speaking, let me just thank the chair on behalf of all the witnesses for the courtesy that you've extended to us. I think you've been shown great sensitivity in dealing with important rights that people have and that need to be protected, but it's the chair that does the protection. It's a great personal privilege for me to be here and to see that the years the chairman has spent in this occupation have obviously produced an experience and knowledge and wisdom. I think it's you have to take a broad view. As the chairman suggested, the government itself has got problems in this area. I think back in 1985, 87% of the federal budget deficit was supplied by foreign central banks.
Exactly.
Not foreign investors, but foreign central banks. So this is a broad problem, and it takes, I think, a comprehensive kind of solution.
Oh, thank you very much, Senator. And let me say that anytime, you still have the privileges of the gym as a former member, but but anytime that, but fine, and I'll have a chance, if you haven't already, go into the really splendid Rayburn Building gym. It'd be an honor. Do you have any statements, Fritz? All right. Let me then just end up as we started by thanking you gentlemen for your cooperation, and forgive us for having imposed on your patience and goodwill. We've gone right through the luncheon. If more members were not here, it's due to the fact that the House quit yesterday at about 2:30, and most of the members nowadays go back principally to the districts, and unfortunately couldn't hold them. I'll say this in defense of this great committee. The House did that to us when we were trying to round out and finish the banking bill in June. And they stayed here. The overwhelming majority stayed here not only one day, but 2 days. And a lot of them canceled important, and we got the bill out. So thank you, gentlemen, very much. And you will get a transcript of the proceedings for your correction or addition, modification. We really appreciate it. And the committee will stand adjourned until further call of the chair.
That concludes this hearing of the House Banking Committee on allegations of wrongdoing by officials with the Bank of Credit and Commerce International, also known as BCCI. A reminder to join us Sunday evening here on C-SPAN just before 6 p.m. Eastern Time for highlights from this week's House of Representatives debate on a bill to extend unemployment benefits to jobless Americans who have exhausted their usual compensation. Coming up next, a discussion of media coverage of the war. That's just after we break.